People worry about cord cutting and the impact on linear television, but I think it was Goldman that once called it the point of indifference for Comcast because of the broadband business model. There's the opening bell in the S&P 500 at the CNBC Real-Time Exchange at the big board Quannex Building Products Corporation, celebrating 55 years at the NASDAQ, the American Red Cross, in honor of National Blood Donor Month. Jim, maybe raise the curtain a bit about the reason you're in Seattle and what you expect to ask Nadella today.
Well, look, I think that the company is taking so much share in the cloud that almost everything else takes a back seat. A lot of things support their cloud. If you have the regular Microsoft operating system, it is so much cheaper to migrate to the cloud that Microsoft has, Azure, than it is to go to Amazon. Some people think it's 5 times more expensive to go to Amazon Web Services. We have to talk about that. We also have to talk about the strength of this company during his tenure. This is a company that I think a lot of us just said, oh, it's going to plod along. It has got a remarkable return, and there is no government intervention here. That already happened. That happened 20 years ago. This is a behemoth of more than $1 trillion that nobody says, you know what, that's not fair, versus some of the others, including its competitor, Amazon.
Well, it's a big reason why the market, the overall indices are where they are. We're at S&P 3,300 for the first time, record high. Dow 29,165. As you can see, record highs all across the board. Jim, I think it was Bespoke yesterday that said the 5 largest stocks now make up 17% of S&P market cap. That is the highest reading since at least 1990, and it actually eclipses the levels that we saw in early 2000. So we are relying heavily on a few select names like Microsoft.
That's incredible, because remember, you had Cisco at $400 billion during that peak in 1999. So for it to exceed that period is rather amazing. Look, this is a market that is rewarding companies that are international, rewarding companies that have technological proficiency that nobody else has, rewarding companies that have with multiple streams of revenue, like Microsoft, like Amazon, like Alphabet. Think about all the things those companies have. No wonder there were candidates who wanted to break them up. The sum of the parts are incredible. They're all doing the amazing things that make it so inflation is so low. So you can have great growth, low inflation that's what these companies do. And we don't talk about their impact to the GDP in terms of inflation and growth nearly enough, but the stock market's rewarding them.
Guys, a name we've been following lately, given its stratospheric rise, of course, has been Tesla. Nothing but up for the most part since the start of the year and well before that. It is downgraded this morning by Adam Jonas over at Morgan Stanley to an underweight. His price target, though, of course, goes to 360 because he's so far below where the street is. But you can see it's having an impact on the stock a bit today, Jim. Risk to the long-term Chinese business that may not be fully appreciated by the market. He talks about he's got a $332 discounted cash flow value for the core auto business, $28 for mobility. His GAAP EPS forecast increased to 22 for 2025. I mean, how can you even have 2030 EPS? How do you even have a?
Did you Google fatuous? Did you Google fatuous?
10-year EPS. What do you Google? Sorry, I didn't hear you.
Yeah, Google the word fatuous. By the way, in 2030, the Eagles are going to win the Super Bowl. They're going to win it big. I mean, what the heck is this report? When I read it, I said, this is a buy report, not a sell report. I regarded this research as value subtracted. I am Jimmy Chill now, so that's hard to say. I do want to just say I think it's suboptimal.
I mean, look, his bull case was 500. Stock's gotten there. He does say investors will be presented with more attractive opportunities to own the stock in the future. He ups his China numbers, as he says, is encouraged by execution in China.
Well, I mean, if I were, remember the old Elon Musk? He would smoke a doobie and make fun of this guy. That Musk is gone. Now we have a definitive Henry Ford without theological issues meets Edison. And I think that he's a statesman, because otherwise he'd take this fellow apart. That doesn't happen anymore. Some of us miss the old non-shill Elon Musk, but he must be rolling over wherever he is right now, because this was just ill-advised research.
Yeah, well, maybe Musk is just doing those horrible dance moves. That's probably right.
Why do you
Remember
say
last week's
horrible?
dance?
Why do you say
They were horrible? They were horrible. It was horrible.
Oh, please.
Nobody wants to watch that.
You are a defeatist and a negativist.
Really? A
I
defeatist
thought he
and a
danced
negativist?
well for his age. I thought
For
he
his
danced
age?
well. I mean, I don't know if we had the clip.
that old.
Well, okay, so he's not Fred Astaire. What are you looking for?
I'm looking for a little rhythm, my friend. Just a little bit. A little bit.
Hey, David, for a trillionaire, he does pretty well.
I say Bezos is a better
he could
dancer.
buy dancing lessons.
I think Bezos is a better dancer than Musk.
You're just trying to get
he's
land
a tiny
Bezos.
dancer,
That's all you're
Bezos.
doing.
Come back from Europe. I'm ready for you, Jeff, wherever you are. I don't know about Nadella's dance moves, though, Jim. Maybe you can sample those later. Yeah, that's horrible dancing. I'm sorry.
Yeah, look, if he's wearing the black T-shirt, I got to tell you, he has game. You know, he doesn't.
He's got game.
He doesn't. You know, he is not a slave to convention like you.
That's true. I am a slave to convention, a defeatist, and a negativist. Speaking of negative, AT&T this morning gets a long report, Jim, from Moffett-Nathanson. It's a firm that we follow closely, given their numbers. They're focused on Turner, which is a part of Warner Media, contributes over 50% of the company's EBIT. That is the Warner part of AT&T. You can see it's not having an impact at all on the stock price. They're concerned continued ratings declines, viewership declines at Turner, at TBS and TNT, and what that's going to mean for the renewal cycle that the company is in the midst of in terms of renewing its affiliate agreements with all the big cable providers. What I can tell you is those concerns may be a bit misplaced based on at least conversations I've had. A lot of those deals have already been done, the renewal deals. They're not for 5 to 7 years any longer. Now they're closer to 3 to 5 years. Don't know the terms, but the concern about them all coming up this year, that may be a bit misplaced from what I hear. Many of the big guys have already been done. There is no doubt that, as we know, back to Peacock, of course, and the other streaming efforts, the universe of cable subscribers continues to decline and will continue to decline, and that is having an impact. We also know that the programming featured on TNT and TBS, we may love it. I'll never stop watching The Fugitive or, a couple of those other movies, but, because whenever you're flipping. But they're going up against the likes of all the new entertainment product available on all of the streaming services. The ratings are down. CNN, by the way, has been quite strong. But perhaps a little bit much here made of that, given that they apparently have had successful renewals already.
You know what, David? That sounds like the Paul Allen. I'm sorry. Who is the Bullcase singer? Elliot.
Yeah, Elliot.
The Elliot guys are going to win. Is Elliot going to win?
No, I don't know.
Paul Allen.
I don't know about that. I think it's still
Allen
worthy. Yeah, this is still worthy of a great deal of focus and will be during the course of this year as to whether they can meet those targets for revenue growth of the company and what pressure it's going to continue to be under as a result of subscriber defections at DirecTV, the pressure that we see in the cable universe, HBO Max's launch, which we talked about earlier, which will take place in April, how well it's going to do in terms of getting traction. All of these things make AT&T an important watch, not to mention as well the wireless business, which of course continues to be the important part of the company, at least roughly half overall. So, Jim, we'll see. There are those who still believe eventually they're going to have to throw in the towel, divest their DirecTV, figure out something new for Warner. Who knows? But that's not going on
David,
now.
Elliott Partners is using a $60 price target. When I listen to you, it reminds me that this is a tentative situation. And it's actually a situation that's on the fly. I think it's interesting that you just mentioned the wireless as an afterthought. So what happens? So Stevenson buys AT&T. He buys something that Great American Jeff Bewkes sells him, and it doesn't get him the cash flow that he thought it would?
Well, it gives a decent amount of cash flow. The question is whether or not it will actually increase that cash flow and all the revenues. I mean, it's a pressured business on some fronts. Turner being an example of that. HBO, the question again, will HBO Max really gain significant traction at its price point? The service is a robust one. I mean, I remember being there. There's a lot on there, will be when it's available. But will it go far beyond the current HBO customer? These are key questions. And then the wireless business. Listen, back to T-Mo and Sprint. We'll see what happens there. If that deal doesn't happen, is it better for AT&T Wireless? If it does happen, is it better for AT&T Wireless? 5G. There's a lot swirling around here. And the guys at Elliott are no doubt, they're smart guys. But you know what? I've seen a lot of smart guys, as you have, Jim, end up being wrong.
Right. Well, talk about a stock that's not participating in the Great American Rally. I mean, holy cow, this one isn't. AT&T was considered to be a very safe stock when we felt that there would never be a China deal. Now, all of a sudden, overthinking is that this is dead money. And we'd rather be in aggressive stocks that are going to clean up, so to speak, if there really is a deal that can be enforced. David, I've got to tell you, the stock is uniquely wrong for this market. 100% well, no, there's some South America. But estimates could be coming down here. There are not many companies so far where estimates have come down where they off of reportage, except for Target.
Yeah, that's true. And Carl, of course, what is working keeps working, which is Facebook, now up over 8% this year. Apple's having a very strong morning, returning to its more than 7% gain so far this year. And Alphabet, I mean, those three names alone, the market cap that's been added during just the first 10 or so trading days of the year has been pretty astounding.
Just what we were saying a moment ago about the market leaning on the giants. Jim, I want to get you on rails because CSX is tonight. Cast freight, biggest drop since the recession for December. Rail traffic last week down 9.6, no good. But the rails are testing all-time highs today. Why?
Precision railroading. I mean, this is one of those situations where they're getting, let's just say it, more per car. CSX is heir to the this whole process. You got Jim Foote, who's running the company, CEO, and I got to tell you, I think people are going to look at efficiency rating, and if the efficiency is good, they're going to take it up. Don't forget, Union Pacific, huge beneficiary of anything that goes on just because of commerce that goes west to Southern California ports that then goes to China. This group is it's on fire, and it's on fire because of what people think is going to happen in the future, not people thinking about what's going to happen in the past.
Yeah, we'll see what happens. There's been some research the last week that suggests they're going to squeeze another beat out of the quarter on restructuring, maybe some cost cutting, but how long can that hold up before fundamentals return? And then, Jim, utilities. I mean, we talk about tech and Alphabet and all of the giants rising, but at the same time, utilities also hitting new highs. Is this a hedge or just a signal of a global rate environment that remains low? What's happening there?
And this is astonishing. I'm glad you brought it up. Carl, if you thought the economy worldwide was going to grow because of a trade deal, why would the utilities be rallying? Why would oil fall? Oil, I think, is becoming atavistic, at least in the minds of the investors. That's what we heard from Larry Fink. But I think this rally in the utilities is a search for yield wherever you can find it. I'm looking at American Electric Power. It really is at the whim of customers, and it's still got a 2.8% yield. But this stock is it's really on fire. When you look at the chart of AEP, doesn't that look like Alphabet? Doesn't that look like Microsoft? I mean, isn't it amazing?
It truly is. Just a signal that investors are buying just about everything. VIX dips below 12 here at the open. Dow's up 160 and obviously 3,300 for the first time on the S&P. Let's get to Bob Pisani. Bob?
S&P 3,300, Dow 29,000. We're firing on all cylinders and a number of breakouts occurring. Let's just take a look at the sectors right now. Tech of course, breaking out. Consumer discretionary strong. Banks having a better day. They've been selling off going into earnings. Better today. Morgan Stanley was just terrific numbers. Consumer staples and the Vanguard REIT also strong as well here. Retail I mentioned up. Semiconductors up. Emerging markets also up for the day. There's a number of things. We're talking about catching up with technology. A number of sectors doing very well. Here's the NASDAQ 100 up 4% for the year. But the IPO ETF right near historic highs, 7%. Home construction's outperforming. China stocks have been doing well ever since the beginning of the year. Aerospace has also been an outperformer. So it's not just tech out there. There's a lot of other things that are performing not only in line, but even better than some of the technology stocks. Banks are better today on the Morgan Stanley numbers, but KBE, predictably, this is the bank ETF, selling off going into earnings. This is a very typical phenomenon, but we had some very particular things happen this week in the earnings overall. If you just take a look, so little disappointment with Wells Fargo, small disappointments with U.S. Bank Corp. You see down for the week here. PNC was in line. Morgan Stanley way above expectations. Citi hit a new high yesterday. So you see mixed results on the overall actual earnings that we're getting for the week. For earnings today, Morgan Stanley, big beat on the top line and the bottom line here. Look at that. That's 7% on the upside. Big move for Morgan Stanley. Charles Schwab, slightly below expectations, but they're giving them a break because there's a lot of discussions about that upcoming deal with Ameritrade. And on that, they did have the press release this morning. Didn't have an actual press call, but they had a press release. And you can see here, assets, this whole Ameritrade deal is really about assets under management and synergies. Big asset gatherer, Charles Schwab. $4 trillion, up 24% year over year last year. And of course, on the Ameritrade deal, they said they are aiming to close in the second half of 2020. They've said that before. We don't have a new update, but obviously this is under review right now. There may be some small antitrust issues, but we haven't had a big update. That's where we're at still so far. As far as what's going on, remember, this is not about trades. This is about synergies, and it's about gathering assets. The new combined entity would have more than $5 trillion in assets combined, and it's also about synergies. You're going to close a lot of sectors there that are going to be redundant, and they are talking about very significant cost synergies overall. What else is going on here? Why the deal is going to have? Look, this is all about the banks. 60% of their revenues are from the bank, net interest income. So when the yield curve changes, it really matters a lot to a company like Schwab. They also have a very big asset management division. Of course, they've got a very big ETF division. They have funds that are out there, and they make money on that, 30%. So there you got 94% in that. Here's trading, what we always talk about. This is what zero commissions eventually will do to you. You're down to essentially 3% and others about 3%. I expect you're going to see a lot more consolidation this year in a lot of these other businesses, particularly the ETF business. Carl, there's 150 ETF companies out there, but the top 5, including Vanguard and BlackRock, they have 90% of all the assets. 5 companies, 90% of the ETF assets. Back to you, Carl.
Incredible, Bob. Thanks. Bob Pisani. Let's get to the bond pits and Rick Santelli, who brought us that good eco data earlier this morning. Hey, Rick.
Absolutely, Carl. And as I get various emails, there's a lot of picking going on the data. The control number for retail sales up 0.5% was solid. Yeah, we lost a little bit on a revision. But the point is, do you average it together, or is this a building momentum scenario? And there is a difference. The data was good. Look at an intraday of 10, immediate response in the marketplace. It popped. 10s are up 3 basis points, 2s are up 2. And this, of course, changes the direction of the week, as you see on the 1-week chart. We also had a close yesterday. It was the lowest in 10s since December 4th, as you see on that chart. And the ongoing discussion is as follows. If the signing of the trade deal and all the associated market factors that led up to it are the reason that equities are doing so well, then why is it exactly they're not having a similar effect on pushing rates higher? And it's something that we will be thinking of in the Santelli Exchange discussing later today. Finally, the dollar index. Now, if we go back to November, you can learn a lot. November index is down a bit yesterday. It's coming back today, but it certainly looks as though it may have peaked, and you see those lower highs successively. Want to pay very close attention to right around 97.30 to 97.5 in the dollar index. Carl, Jim, David, back to you.
All right, Rick, thank you. Be sure to check out our podcast. You can actually listen to the opening bell hour of Squawk on the Street wherever you get podcasts. Record highs across the board. S&P 3303. We're back in a minute.
The Bond Report.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Along the goal line, Martin scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
This week on the New Yorker Radio Hour, has Silicon Valley changed since all the revelations about the world's social media companies?
I think people are really reluctant to relinquish this narrative of being underdogs, of being innovators, of just trying to experiment and make the world better.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Puts his head down, crashes in
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown!
Search NFL to never miss a moment of the action.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown. Again.
Search NFL today.
You got phase one already signed. Bank earnings essentially wrapped up on solid notes. The data today was outstanding. And breadth is good. Record highs across the board. Stop trading with Jim's back in a minute.
At Fidelity,
Haskell gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
you get personalized wealth planning and unmatched overall value. Together with a dedicated advisor, you'll make a plan that can adjust as your life changes, with access to tax-smart investing strategies that help you keep more of what you earn. And with a new brokerage account, your cash is automatically invested at a great rate that's at least 20 times more than other advisory firms. Personalized advice, unmatched value. At Fidelity, you can have both.
Hey, saved your seat.
This round is on me. Hey, can you spot me? Come on in.
Find your place today with Silver Sneakers, included in most Medicare Advantage plans. Enroll today by calling the number on your screen or visit getsilversneakers.com.
Hey, our workers' comp insurance is expiring. Should I just renew it?
Yeah, sure. Hey there, small business owner.
Pi Insurance here with some sweet advice to stop you from overpaying on workers' comp. Try Pi instead and save up to 30%.
30%? Really?
Sure. Get a quote in 3 minutes at easyaspie.com.
That is easy.
So, need another reminder?
No, I'm good. Reminder for what?
Oh, yeah. Need workers' comp insurance? Get a quote in 3 minutes at easyaspie.com.
CNBC at the Ultimate Power Summit. World and business leaders, influential thinkers, together at the World Economic Forum in Davos. Global challenges, smart solutions, new opportunities. Coverage begins in Squawk Box at a special time, 5 a.m. Eastern, Tuesday.
Jim and Joanne are here to pick up the same prescription. They both know the system is not on their side. They both know drug costs are out of control. But one of them is taking back control with GoodRx.
Next.
So while he's paying that much, even with his insurance, she's paying this much just by using GoodRx. Use GoodRx to compare prices at pharmacies in your area and stop paying too much for your prescriptions. Download the free app today and take back control.
Is your credit card debt stressing you out? Take control. A personal loan could help you crush high interest rates and reduce your monthly payments so you can get out of debt faster and save money. Whether you're a credit stud or a credit starter, at Credible.com, we help you find great rates from multiple lenders. In 3 minutes, get actual pre-qualified rates. Have the money you need as quickly as tomorrow and start living your life.
Visit Credible.com to see how much you could save.
Let's get to Jim and stop trading.
Yeah, look, one of the things that's happened for most of the quarter so far is that analysts have to catch up to stocks. If you take a look at the stock of AMD, okay, Advanced Micro Devices, you got a comment today from Barclays, 32 goes to 50 price target. Well, what are you going to do? The stock has overrun the price target dramatically. Lisa Seuss produced about well, there's a return since she started. It's amazing. Data center this time is growing. A lot of people didn't still understand how Intel couldn't produce its chips. This is what's driving the market. Stocks that have exceeded price targets where the analysts are playing catch up.
That's for sure, Jim. And we all know what's coming up tonight.
Yeah, but look, Satya Nadella is going to announce what I regard as an ambitious new plan to address climate change. And we're going to be there when it's announced. I think it's pretty monumental, by the way, because this is where the future is. And by the way, we also have GW Pharma, which is a company that makes artificial cannabis. And that company's on fire. They pre-announced a really good quarter on Sunday night.
All right, Jim.
Sustainability, one of the themes of the week, without a doubt.
Oh, my. David, ESG. Okay, those are the letters you need to know.
Jim, we'll see at 6, if not before. Our Jim Cramer making his way around the country in Seattle today with Microsoft. Dow's up 147 as the record-setting rally continues. We're back in a moment.
Look who's cheap.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Got big plans for 2020? Capture and share every highlight on a gorgeous iPhone 11 with an ultra-wide camera. In Tesco Mobile's big January sale, you can get the latest iPhone for £40.75 a month with double data. That's a mighty 20 gigs. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of January. Was 10 gigs, now 20 gigs. 36-month credit and rolling monthly usage agreements with Tesco Mobile required. Subject to status. Phase policy applies. See tescomobile.com/terms.
Down the middle of the 10. Got to the 5. Tumbles in. Touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
Good Thursday morning. Welcome back to Squawk on the Street. I'm Carl Quintanilla with David Faber and Morgan Brennan, who's in for Sarah Eisen. We're live at Post 9 of the New York Stock Exchange. Record highs across the board and some more data crossing the tape. Let's get back to Santelli.
Absolutely. Our November read on business inventories, as expected, though not strong. Minus 0.2 expected, minus 0.2 is what we received. Last month, 0.2 shaved to only up 0.1. And now for our January read on National Association of Home Builders Housing Market Index, we look to our housing expert, Diana Olick. What do you think, Diana? Diana? Well, I don't hear Diana. It is 75. 75 is our January read. It's a little bit stronger than we were expecting. Sequentially, it follows 76. Carl and the gang, back to you.
Rick Santelli, thank you. Our roadmap starts with the broken record rally. New highs across the board today after the signing of that Phase 1 China trade agreement. But are there still economic uncertainties surrounding the deal?
Plus more delays for Boeing, with Southwest now joining the mix of airlines pulling the MAX until June.
And we're still focused on the financials. Today, Morgan Stanley shares were up strongly, this on an earnings beat and a strong outlook.
All right, let's get to these record gains this morning. As we said, all across the board as we have touched S&P 3,300 for the first time. Joining us, Chief Strategist at BNY Mellon Investment Management, Alicia Levine, as well as Chief Investment Strategist at Northwestern Mutual Wealth Management Company, Brent Schutte. Good morning, guys. Good to see you. What do you make of the action, and what's inexpensive now, if anything?
So we have very expensive markets here, but this is a liquidity-driven rally, which means it can go on for a while. And the U.S. has not yet seen the full impact of those 3 rate cuts last year because it takes about 12 months to wend their way through the system. So we're pretty positive on the year. Having said that, there are going to be some hiccups along the year, not least of which is the election, and not least of which is our new trade deal, which contains within it the seeds of some uncertainty going down the road.
So are you looking for a intra-year drop? And if so, by how much?
So we think there could be an intra-year drop for about 10%. I mean, a typical year is about 14%, so that wouldn't be unusual. Having said that, when you have such a huge year like you had last year, up almost 30%, including dividends, then you usually have a very positive year following. And we had a fiscal boost and a monetary boost last year. That's working into this year's earnings.
Brent, what do you think of markets at these levels?
Yeah, I agree in large part. I mean, I think you had 3 kind of headwinds to the markets for the past year and a half. They were one, the Fed, which was tightening, as your prior guest mentioned. And now they're easing, and so that should begin filtering through the system. And there's no chance, in my estimation, given the election, the back and forth between the Fed and the president, that they actually hike in 2020. You had the trade war, which I think the president has what he needs to take the electorate right now, and I think he'll dampen it given it's election year. And number 3, investors, unfortunately, over the past year and a half have been building cash up. I think now, as those recession fears ebb, that is fuel for the fire of the market to go higher. And as long as bond yields remain behaved, I think the stock market moves higher.
You just mentioned, Alicia, uncertainties around trade. What are they?
So the really interesting thing about this trade deal are the purchases, the $200 billion in incremental purchases. So that's not really free trade, right? That's sort of managed economy. But it's so much of a higher boost than what we had last year or even the level of 2017. It's going to be very hard for China to achieve those levels. And now the U.S. has a mechanism by which it can then dispute it with China. And if there's no satisfaction, the U.S. can raise tariffs again. So we've actually encoded the ability in law to raise tariffs again. I just think it's going to be very hard to achieve those $200 billion in the level.
And I would imagine that some of those commodity purchases, for example, are going to come from maybe sales we would have made to our other trading partners to go to China, which you would imagine potentially bid up prices.
That's right. It's not entirely additive to the levels that we already have, although it is a win. It's definitely a win.
But I think when you take that and you couple that with, say, wage pressures, and we're hearing this idea of margin compression due to how low unemployment is in this country, you've got to wonder what that means for the economy and the potential for it to run hot, and thus what the Fed does.
Right. So that's one of our smaller risks for this year. So we think that there is a chance that inflation raises its head in the next 12 to 18 months. And it sounds like a crazy thing to say. It's a small risk. But the Fed has said they're going to sit on their hands and they're going to let the economy run and run hot, and they want it. And I think even if you see a 2.5% inflation rate,
2.5,
even if you see it, the Fed could sit. So that sets us up. We have a tight labor market. We have a labor force participation rate, which is pretty good. The prime age participation rate is very good. Think about where we're going here. And firms can't find workers. I mean, that's what small businesses tell us. They can't find workers. We're set up. If all goes well, doesn't mean it will, but if all goes well, we're set up here to see some sort of rise in inflation here.
Well, you got copper today, Brent, at the highest since May. Palladium, I know it's a little arcane, but you got to go back 3 years to see prices like that. I mean, what's to say that protein, and then eventually labor is not far behind?
That is a risk. So inflation, actually, the core-ish measures of inflation, while all this talk about deflation and lack of inflation, the core-ish measures of inflation, such as trim mean PCE, Atlanta Fed sticky CPI, they have actually been rising over the past year, not falling. And so while market expectations and market indicators have come down, there is a disconnect there that may have to be rectified somewhat later in the year. But I think, as Alicia mentioned, the most important thing that I can tell you, and the most important thing I've been saying for the past 3 to 4 years, is the Fed doesn't care anymore. The Fed has completely shifted from being what it was, an inflation fighter, a cycle ender, a disciplined market participant, to now being one where they're an inflation enhancer, a cycle enhancer, and they actually don't want the market to go down. They listen to the market. The Fed's economic outlook will be met this year, and yet rather than hiking twice, they lowered rates 3 times. And so this is a big shift in the Fed that we've seen over the past year.
That would make sense unless Dallas's Kaplan, for example, now talking more overtly about the risk to the rise in the balance sheet, that it's not free, right? That there's the danger of it creating imbalances. And if that view gets spread across the committee, who knows?
That's right. Well, look, we've learned that central banks are really good at inflating asset prices. They're not, it turns out they're not actually so good at raising inflation. And this could be the mechanism by which we get some inflation. Look, there's a risk here. If all of the rally and all of the sentiment is due to increase on the balance sheet, what are these central banks supposed to do? I don't know how we get out of this. You know, smarter heads than I need to figure this out. But, you know, this is central. You know, the Fed is endogenous to the stock market action. You can't separate the two.
Yeah, as much as some people try to separate them, the market ex-Fed. Alicia, Brent, thanks, guys. Good stuff. See you soon.
Thank you.
Well, let's get back out to Diana Olick with today's housing data. Diana.
Right, and I can hear you this time, Morgan. Home builder sentiment in January dropped 1 point to 75 on the National Association of Home Builders Index. And last month's reading was a 20-year high, so that's still pretty good. Anything above 50 is considered positive, and last January sentiment was at 58, so this is a big jump. Builders cited strong demand, low mortgage rates, and very low supply of existing homes for sale. Of the HMI's 3 components, buyer traffic increased 1 point to 58, the highest level since December of 2017. Current sales conditions, however, fell 3 points to 81, and sales expectations in the next 6 months was unchanged at 79. Now, one more piece of data we got this morning. Mortgage applications to purchase a newly built home jumped nearly 39% annually in December. That's a strong end to the year, which seems to predict strong sales to start 2020. David?
Diana, thank you. Diana Olick. Meantime, Southwest is joining other airlines in extending the cancellation of 737 MAX flights. Phil LeBeau is back at our headquarters. He's got a lot more on that continued story. Phil.
David, we expected Southwest to do this at some point, especially with American joining United by pushing the MAX back to early June. So here's the new launch date, if you will, for when Southwest plans to once again start flying the 737 MAX. June 7th. You see both American and United down with June 4th. Because it is moving back the MAX return by almost 2 months, Southwest is going to be canceling almost 18,000 flights that were on the schedule. That means the total number of scheduled flights by U.S. carriers that have been scrapped because they don't have the MAX now totals more than 170,000 flights. And that's all the way through the beginning of June. As you take a look at shares of Southwest, not a whole lot of reaction on the stock. Most people expected this to happen today. But the big concern, guys, is whether or not Southwest, along with American and United, will have a second straight summer flying season without the 737 MAX. And remember, the summertime, that's the busy time for the airlines. It's the most profitable time of the year for them. To not have the MAX a second straight summer, that would be a devastating blow for them. No, is it going to kill them completely? No. But this is certainly not what they were expecting. Certainly not a second summer without the MAX.
Okay, so Phil, given the fact that Boeing has struck some deals, some compensation deals with airlines like Southwest, we don't know the numbers.
Right.
The fact that you're continuing to see these extensions in 2020, are they going to have to go back and make more of them, including with some of the same airlines?
Yes. We have not seen the end of these deals, Morgan. Most of these deals were structured to take care of flights that were lost in 2019, but they were not structured for the most part, to take care of flights lost in 2020 because it's open-ended. Will we have the MAX back certified by April, by May? Nobody's quite sure. And as a result, these deals they're basically open-ended at this point in terms of what happens in 2020. Look for Boeing at some point, perhaps in 2 weeks when they report earnings, to take an additional charge or to say we expect to take an additional charge because of compensation for airlines.
All right, that would be the second quarter in a row. We're having to X out some big charges. Phil, thank you. Some incredible numbers there. Still to come this morning, Morgan Stanley shares are up big after that beat this morning. We're going to dig through some of the numbers. Impressive action in wealth management as bank earnings season essentially comes to a close. As a reminder, you can always watch us live on the go on the CNBC app. Download it today. Squawk on the Streets back in a moment.
I spy with my little eye something beginning with P.
People.
No, parrot.
I'll have to remember my binoculars next time.
Although you might not be able to see it, your small actions can have a real impact with Shell. Every time you fill up and use Shell Go Plus, you'll be protecting and replanting forests around the world. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February and you can also get £200 off a new boiler or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Got big plans for 2020? Capture and share every highlight on a gorgeous iPhone 11 with an ultra-wide camera. In Tesco Mobile's big January sale, you can get the latest iPhone for £40.75 a month with double data. That's a mighty 20 gigs. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of January. Was 10 gigs, now 20 gigs. 36-month credit and rolling monthly usage agreements with Tesco Mobile required. Subject to status. Phase policy applies. See tescomobile.com/terms.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
Welcome back to Squawk on the Street. It is time now for our ETF Spotlight. Taking a look at the financial select sector SPDR ETF, ticker XLF, erasing its losses for the month and currently trading up about 0.5% today. Morgan Stanley is today's biggest gainer on the S&P 500 thanks to better than expected quarterly results. That stock is currently trading up almost 6.5%. Wilfred Frost has a breakdown of the company's numbers and joins us here at Post 9.
Good morning, Morgan. Good morning, guys. So Morgan Stanley soaring, as Morgan just said. A very strong Q4, albeit a little lumpy, led to about 2% of the gains we've seen pre-market, but it's the new guidance and targets that have really driven shares higher, up 6.5%. Q4 revenue was $10.9 billion, about $1 billion ahead of estimates, and EPS of $1.30 was about 30 cents ahead. It was a broadly strong quarter in all segments, with particular standouts being strong fixed income trading of $1.3 billion, about $400 million ahead of guidance, and very strong investment management revenue of $1.4 billion, some $600 million ahead of expectation, which came thanks to a one-off from their Asia PE funds benefiting from a successful Q4 Hong Kong IPO of an early investment they'd made. The guidance was what really impressed. Return on tangible common equity, 13.4% in Q4, new 2021 guide of 13 to 15%, and long-term target of 15 to 17%. Wealth management, which now accounts for over 40% of revenues, had a 27% margin in Q4, gets a new target margin of 28 to 30% for 2021, long-term of over 30%. Chairman and CEO James Gorman was optimistic on the call about growing the wealth and investment management platforms.
Highlight the growth in long-term net flows, which reflect strong long-term performance. With combined revenues of approximately $21 billion, our wealth and investment management businesses are among the largest platforms in the world, and now we have an untapped opportunity to further scale our wealth management channel through our workplace offering.
Today's share price move means Morgan Stanley jumps ahead of Goldman Sachs in terms of 2020 share price performance, but the two pure-play investment banks are well ahead of the pack in terms of starts to the year. The KBW Banks Index, in fact, negative year-to-date. Wells Fargo, very much the laggard so far.
Were we expecting these kinds of long-term targets? I'm just curious as to why now, particularly in light of the fact we're getting Goldman's Investor Day.
Yes, we do. So they do their annual target review always in this quarter's earnings. So we're expecting targets, just obviously not quite as strong. I think that they were broadly impressive, but wealth management's really interesting because of the scale they're starting to deliver there. We know it's a scale business across all forms of investment management. Two things. One, was there a question mark of whether looking backwards Q4 margins would be under pressure because of the consolidation we've seen in the brokers? Absolutely not. Q4 beat as well at 27%. And is there a question whether it would going forward? And again, the answer to that, no. And also the optimism he talked about growing now what they have on their corporate offering, which is sort of the Fidelities and BlackRocks of this world are really big in when you have work-based access to equity and they give you an account with it, and then afterwards when you sell them, what do you do with that? That was very optimistic in terms of integrating the acquisition of Solium, and clearly the market really likes this. They had been cheap, like Goldman Sachs had been by the back end of last year, but the investment banks, both of them, having a good start to the year.
Yeah, I mean, still trading at about a 10 multiple. Depends on your view as to whether that's cheap or not, but certainly today it looks...
Yeah, price to book of sort of 1.1, 1.2 for the two of them. Got Morgan Stanley putting 6% of premium again themselves over Goldman today, but that's cheap for both of them. It's cheap relative to the money centers, but shows that there's still some ground to catch up. I think at the start of the week everyone was saying, oh, look, Citi's still cheap relative to the others. I think Goldman and Morgan Stanley fit into that category as well.
All right, Will, thank you. As you're talking, the president here with a tweet regarding phase one. The farmers are really happy with the new China trade deal and the soon-to-be signed deal with Mexico and Canada. But I hope the thing they will most remember is the fact that I was able to take massive incoming tariff money and use it to help them get through the tough times. Sort of runs afoul of what we've heard from some groups like Farmers for Free Trade, who said this deal makes American farmers increasingly reliant on Chinese state-controlled purchases. So it's by no means a uniform response among the ag community to this deal so far.
Yeah, given what we've seen play out with weather as well, that was a big issue in terms of the planting cycle and the harvest cycle in this past year, and really the past couple of years that affected farm incomes too. That's going to be another key thing to watch in terms of trying to ramp up supplies to actually meet some of these quotas in terms of exports to China too.
Okay, and there's a look again at what we just heard from the president regarding farmers, an important block, obviously, as well, of voters. The upcoming election, particularly in some of those key states, although those states do tend to lean towards his party.
States like Iowa.
Yes, Iowa, where we're going to have a caucus in the not-too-distant future. All right, after the break, is Beyond Meat overcooked? We're going to debate that stock next in the midst of what's been a volatile week for it. When Squawk on the Street returns.
ETF Spotlight is sponsored by Invesco.
Take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada. Or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
Listen, we know you're not here for ads, but while you're waiting for the music, cybercriminals might be waiting for you to expose your login credentials and payment information over Wi-Fi. Help keep your online activity private with Norton 360. It gives you multiple layers of protection, including secure VPN with bank-grade encryption, device security, password manager, and PC cloud backup. Go to uk.norton.com to get all-in-one protection starting at $24.99 for your first year. Terms apply. That's uk.norton.com.
Got big plans for 2020? Capture and share every highlight on a gorgeous iPhone 11 with an ultra-wide camera. In Tesco Mobile's big January sale, you can get the latest iPhone for £40.75 a month with double data. That's a mighty 20 gigs. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of January. Was 10 gigs, now 20 gigs. 36-month credit and rolling monthly usage agreements with Tesco Mobile required. Subject to status. Phase policy applies. See tescomobile.com/terms.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. 1 free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 6-pack of apples from 69p to just 49p. All this week at Tesco.
Selected larger stores subject to availability. Offer ends 20th of January.
Welcome back. It's been a volatile week for Beyond Meat. The company halted earlier this week when the stock spiked as much as 15%, then dipped as much as 8% on a downgrade from Bernstein. Still, the stock has been on a tear, to say the least, for 2020. It's up more than 40% since the start of the year. Joining us now to discuss the stock's wild ride, Wells Fargo analyst John Baumgartner. John, thanks for being with us today.
Thank you.
Want to get your thoughts on the move we've seen. I see you have a hold rating and a price target of 72. Stock's trading above 100 right now. Why are you not buying into this rally?
Well, we think a couple of reasons. There was some news flow out over the past week with Beyond's main rival, Impossible, noting they're not going to pursue the McDonald's business right now. We also saw an expansion of the test markets between McDonald's and Beyond in Canada. And then just most recently the other day, Beyond had come out and noted they're looking to enter China by the end of this year. So we think there's been some good news flow, some short covering in the stock as well. But overall, we're still concerned over the just the structural impediments right now in the competition in this category.
Yeah, you just touched on it, but given the fact that this has been a pretty heavily shorted name, how much of this is a short squeeze?
A fair amount, but I think what's more important is looking at the flows. It's really been retail driven. We have not seen the big institutional buyers coming into the name here over the past week, so it's still very much a retail driven stock.
All right, meantime, you've got this expansion of the plant, lettuce, tomato sandwich with McDonald's. How meaningful could that be?
Well, I mean, we estimate every 1% share of that red meat market at McDonald's taken by Beyond is worth about $50 million of annual sales, compared to about $270 million that we're forecasting for net sales for Beyond this year. So it is large, but we would mention, too, just given the novelty of this product, where we have seen test markets, Tim Hortons in Canada, it seems as though the product is doing better in urban areas. So the geographic appeal of this product is still, very well unknown at this point.
In terms of the supply picture, any reason to think that as a company like Beyond Meat continues to ramp up, that could come under pressure again?
I mean, we think so. I mean, you've seen some other companies out there, Tyson, Conagra, already entering this market. Private labels also getting big. But we also think going forward is what's not known yet. You think about the manufacturing side right now. This industry is using technology back from the 1970s. We're seeing new technologies emerging now that should produce better texture meat, better quality meat at lower cost. And then on the ingredient side, right now about 3 crops comprise 60% of caloric intake, yet there's tens of thousands of edible plants on this planet. We also think you're going to see new crops emerge that have a better nutritional profile relative to what's in the market right now.
You mentioned Impossible, which is privately held, but definitely one of the largest competitors here, and the expansion, the international expansion that's underway for that company, be it in China. I know they're also looking to get regulatory approval in the EU. What does the international picture look like for Beyond?
We see them moving into Europe at this point already, securing some capacity there. China is obviously in the cards for later this year, according to the company. So it could be a sizable opportunity over time. However, they can only grow as fast as underlying supply can grow. And right now, there still are bottlenecks in the system.
All right, John, thank you for joining us today.
Thank you.
Shares of Beyond are up another 2% today.
Some new numbers to share involving the private company WeWork this morning. Remember, much in the news towards the latter part of last year. Of course, the company only signed 4 new leases in the U.S. during that fourth quarter. That was a 93% drop from its prior year average. Now, the pullback did reflect a downsizing the business, of course, after SoftBank took control in October with that large financing package. Marcelo Claure, of course, coming in as well to oversee running the business. New management, CEOs, the co-CEOs stepping out. A lot at WeWork still to come after what was, of course, a key year in terms of its inability to get to those public markets. It is a business in transition, I guess, to try to be generous.
Yeah, absolutely. It also looks like, based on CNBC report, that WeWork ceded that top spot, a flexible office leasing space, to Spaces, which is owned by Regis parent IWG, and certainly the name that has been out there and has been publicly traded and seen as the most direct comparable to WeWork, which I think was part of what triggered so much of the skepticism when we did start to get those filings. The other thing to keep an eye on is, I think...
That was a picture of Marcelo Claure outside court yesterday, just so we know why we were running that video. Anyhow, yeah, sorry.
And I was just saying, the other thing that got my attention today in terms of WeWork is the KKR report that's warning that it could continue to be a drag on some of these unprofitable big unicorns that are looking to raise funding even now into a new calendar year.
I think that is actually a key question mark. I've heard a number of different names, companies that might have been looking for a raise that they haven't been able to get. Will they consider a sale instead? And so, yeah, it has made it more difficult, no doubt, in terms of at least some of those questionable business models that continue to hemorrhage money.
We'll watch that, obviously. Dow's up 160 here this morning. Let's get a news update from Sue Herrera back at HQ. Hi, Sue.
Hello, Carl. Hello, everybody. Here's what's happening at this hour. Ukrainian police say they have opened an investigation into the possibility that the U.S. ambassador came under illegal surveillance by an unknown party before she was recalled from her post in May. This comes 2 days after House Democrats released documents that showed Lev Parnas communicating about the removal of Marie Yovanovitch as ambassador to Ukraine. Russian lawmakers quickly approving the appointment of a new prime minister, a day after President Putin reshuffled his inner circle in a move that could keep him in power past his term in 2024. Mikhail Mishustin, the chief of Russia's tax service, addressing Russian lawmakers before that crucial vote. At least 4 members of a Yazidi militia linked to the Kurdistan Workers' Party were reported to have been killed by a Turkish airstrike in northwest Iraq on Wednesday. The victims were inside a pickup truck which was parked in a Yazidi compound. And Prince Harry helping to unveil the fixtures for the 2021 Rugby League World Cup. in his first public engagement since stepping away as a senior royal. He also met rugby players and representatives of the 21 nations during that event. You are up to date. That's the news update this hour. Morgan, I'll send it back downtown to you.
You know, I'm not a royal watcher, but I just can't get enough of the story about what's going on right now.
You've got a lot of company in that. Yeah, it's everybody's talking about it.
Sue Herrera, thank you. After the break, did China get the better end of the trade deal? Why our next guest believes that might actually be the case when Squawk in the Street returns.
I believe ETFs are a great way to invest in the market.
I spy with my little eye something beginning with B.
Bike.
Nope. Banana tree.
Oh, of course. We must have missed it.
Although you might not be able to see it, your small actions can have a real impact with Shell. Drive carbon neutral by filling up and using Shell Go Plus today. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Stocks hit more record highs the day after the signing of that U.S.-China Phase 1 trade agreement, but there are still economic uncertainties surrounding that deal. Our Steve Leisman has that for us. Good morning, Steve.
Morning, Carl. Views of economists on this Phase 1 trade deal range from guarded optimism to outright skepticism. Here's the good and the bad. The bad, starting with this one, most tariffs remain in place. And that's a problem, although there was some reduction. Most of the tariffs remain in place. China is upping purchases of U.S. goods. Some question about how to account for that. And confidence in capex could, over time, rebound, which has been hit by the trade war. But tariffs can be reimposed. There is some upside for free and fair trade over time, including the importance of dispute resolution in the new agreement. TD Securities, Jim O'Sullivan over there now writes, downside risks for U.S. growth have faded, helped by the Phase 1 trade deal. We don't expect anxiety about trade, however, to suddenly disappear. Oxford has a very similar take. They write, with tariffs still imposed on 2/3 of U.S. imports from China, we believe the Phase 1 deal will only marginally reduce the drag on real GDP growth in 2020 from 0.2 points to a drag of 0.1 points. Still, elevated policy uncertainty will keep business on the sidelines until further clarity emerges. Now, in a statement, Treasury Secretary Steve Mnuchin acknowledged the continuation of tariffs, but he had a different take on their impact. And I quote, the president got very significant wins for U.S. business, U.S. workers, and U.S. farmers. We still have significant tariffs in place as an incentive to get Phase 2 done. So the GDP story in 2020 is going to be one of continued negative effects of those tariffs from last year, working their way through the economy against the potential upside of this Phase 1 deal. And who knows, Carl, at some point, maybe a broader, more significant Phase 2 deal.
All right, Steve, thanks for covering so much ground on this front for the past 24 hours at the very least. Our next guest has an op-ed in the Times today titled, Trump Gets His Trade Deal, China Gets the Win. Brookings Eshwar Prasad joins us this morning, along with former White House Deputy Press Secretary and CNBC contributor Tony Fratto. Guys, good to see you both. Good morning.
Good morning. Good morning.
Eshwar, why do you think China wins round one?
What China has given isn't that much, actually. It's going to buy more stuff from the U.S.,
and they would have bought this from other markets anyway, so it's just a matter of a small diversion. The amount is not going to be very large or affect the U.S. bilateral trade deficit with China in a durable way. But some of the changes that the Trump administration got from China, such as a better intellectual property rights protection regime, is actually going to be good for China in the long run. They want to be an innovation-led economy, and they need a better intellectual property rights protection regime. So a better IP regime is good for China. Whether they will enforce it in a way that does not once again advantage their domestic firms remains to be seen. And that's where China has been very clever at using its previous trade commitments to favor its own companies. Similarly, the agreement to not allow its currency to depreciate actually works well for China. They don't want the currency to depreciate too much and have capital flowing out. So making that guarantee in public actually gives them currency stability, which they're happy about.
Tony, maybe the president's right. Maybe this should have been done 20 years ago, and in the meantime, they've stolen enough to a degree where they can start to be self-reliant.
Yeah, maybe. Look, Esquire makes a really excellent point on some of these structural reforms. They are in China's interest and should have been doing them a long time ago. And I think a couple successive administrations have been trying to convince them of that. So that's why when I look at like some of the elements of this agreement, I think those kinds of reforms are basically good. The continued talking is basically good. We're going to move on to more things. Winners and losers. I don't know that it was worth all of this effort to get to where we are, but I do like the direction. The things that really concern me, though, are some of these sort of directives on, on the currency, for example, and on the sort of forced purchases of these products. What we really want is for China to be more of a market economy, and the administration is putting in structures that encourage them to be more of a managed economy, and that's not really where we're going to go for the long term. But I hope that, I want to be optimistic about future discussions in this.
Esquire, I wonder what you think about financial services aspect of this deal. I mean, some of the stipulations that were laid out in detail yesterday honestly go back to when China entered the WTO. Some of the same types of promises that we see going back 25 years that have yet to be fulfilled. Why would now be different?
As Mr. Fratto correctly pointed out, this is not to be discounted. It is good that American and other financial services firms, insurers, banking firms, and so on, can enter the Chinese market, which is a very large, growing market, which certainly could use foreign competition. But the interesting thing is that China is fulfilling a commitment, as you said, that it made a very long time ago, now at a time that suits it. Because at this point, Chinese financial firms, Chinese insurers can stand on their own and compete with foreign firms. And now the foreign competition is actually going to serve a very useful purpose in terms of pushing forward financial market reforms, in terms of creating better competition in China. So again, China comes out a winner. Not that the U.S. is going to come out a loser, but China has done this reform at a time that suits it on its own terms.
That's where I'm curious now that we can look back, at least now that we have a trade deal here. TPP. Trans-Pacific Partnership. Very much unclear it ever would have passed the Congress, but of course the Trump administration withdrew from it immediately. Do you think that would have been a better deal to contain China and sort of help the U.S. than the trade deal we've got right now with the country?
Certainly that would have had a much better effect in terms of helping the U.S. Write the rules of international trade. The concern right now is that with China creating a lot of bilateral and multilateral deals where it gets to be the key partner that can dictate the terms of those deals, with the U.S. backing off from the WTO, which is something that most other countries still want to keep viable. China has a bigger role. So the U.S., through its actions, has basically given itself less influence in terms of this multilateral process. It may have gotten some small wins from China, but in terms of the broader picture, the U.S. withdrawal from the global trading system, or at least the notion of that, is not helping the U.S. cause.
Tony, I wonder what you think phase 2 negotiations could potentially look like or entail, especially given the fact that one of the other big pieces of trade news this week was the U.S., the EU, and Japan coming out and basically looking for reforms around state subsidies in the WTO.
Yeah, I would have loved to have seen those discussions start 2 years ago. I mean, to Esquire's point about, whether it's TPP or other ways to link arm with allies to present a more unified front with China. It would have been better to start that earlier, but I'm glad that they're starting it now, and that our other major trading partners, Europe and Japan, are starting those discussions. So I hope that that's what we see in phase 2, and that we come around to that way of thinking. Early in the Trump administration, there was this rejection of the economic dialogue with China. Economic dialogue is now back on the table with China. They're going to restart those talks. There was a rejection of multilateralism. Now we're looking at other multilateral solutions to try to present a united front. Those are good things, and we need to see more of that.
Yeah, and that's why one final question to Tony's point about strategic focus. Are we back in the Hank Paulson dialogue era? Are we back in the China's open for business and endless opportunity with 1 billion people? Or are we still in their supply chain must be broken, we're going to distance ourselves, digital Cold War, Huawei, and all of that? I mean, the two sides are operating simultaneously.
It's good that we have a phase 1 deal. It means a little less uncertainty. It means a little less escalation of tensions. But the fundamental uncertainties that affect American importers, that affect American businesses who are thinking about selling into the Chinese market, using China as part of their supply chains, all of those uncertainties remain on the table, and China gets to make the big changes on its own terms. So phase 2 is going to be a very difficult issue. China isn't going to be happy about trying to change the structure of its economy. So I think the fundamental uncertainty is going to remain, and China is going to continue with its broader set of policies, and this phase 1 deal won't have much of an effect on that.
Yeah, on a day where the vice premier tells the Chinese press it would be unwise to rush into phase 2 talks. Ashwar, Tony, we'll see you guys soon. Thanks.
Thanks, guys.
Thank you.
During yesterday's signing ceremony for the trade deal, the president singling out a number of company CEOs that were in attendance at the White House, including this moment with the CEO of eBay.
Scott Schenkel, eBay. I sign things, and the next night I see them on eBay. They're sold. They're sold for a lot of money. I said, sir, could I have you? Would you sign my sneaker? Yes. Then 2 nights later, I see it on eBay selling for $5,000. I say, what kind of people are these, Lindsay? Terrible. Sometimes it's the senators and the congressmen that do it. That's...
President's surfing eBay at night, maybe checking on things that he signed, seeing how they're doing, implying the congressman. I thought it was funny where he just turned right to Lindsey Graham, I guess, and just, this is terrible, Lindsey. Why is this happening?
Yeah, he took aim with comments at quite a number of CEOs and other business leaders in the room as well. Definitely raising some eyebrows.
Scott Schenkel, by the way, is, I think, still the interim CEO at eBay, having taken over for Devin Winnick when he left the company. But I'm sure they're happy to know that they got some traffic in the White House.
All right, well, meantime, getting market flash on Canadian jet maker Bombardier. And Dom Chu has more back at HQ. Dom.
All right, for the record, I do not spend a lot of time on eBay at night. But anyway, we want to call your attention to what's happening with Canadian jet maker Bombardier. Those shares are down about 30% or so in the Canadian trading session right now. Its worst daily decline on record here. And it comes after the company issued a profit warning and said it may have to significantly write down the value of its partnership with Airbus on the A220 model jet. Of course, it comes amid a broader restructuring at Bombardier, focusing more on its jets and rail units. But Morgan, something that you might appreciate here, challenging rail projects in the UK, Switzerland, and Germany, helping to really contribute to that decline. I'll send things back over to you.
Yeah, key data to watch there. That's a big move for that
You're
stock.
on subway cars, too.
Yeah.
Ugh.
Dom Chu, thank you. As we head to break, take a look at shares of Signet. Parent of its sales, Kay Jewelers and Jared, soaring more than 40% on strong holiday sales, a lot of them online. Company also raising its Q4 guidance. Don't miss an exclusive with the CEO on Closing Bell. That's today at 3 p.m. Eastern. Squawk on the Street returns at 3.
Guys, if you wake up feeling fat, bad back,
fly with Cathay Pacific and arrive ready to make the most of the endless white beaches of Bali. Book now at cathaypacific.com. Cathay Pacific. Move beyond.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Down the middle of the 10, got to the 5, tumbles in, touchdown!
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
He's taking contact, and he takes it in! Touchdown! Puts his head down, crashes and spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for 3, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
Let's get to the CME Group in Chicago, the Santelli Exchange. Hey, Rick.
Good morning, Carl. I'd like to welcome the Even Flow Macro Managing Partner and Founder, Mark Summerlin. Mark, thanks for joining me today. Let's get right into it.
Okay.
If we look at what's going on with regard to the markets, many believe that one of the big issues keeping stocks moving higher and Kevlar coated with respect to any big corrections is the recent spat of non-QE, which of course is QE, with all the Fed buying of mostly short maturities, which of course was followed by rate cuts and a much higher bar to raise rates due to inflation. Your thoughts?
Yeah, well, absolutely. I mean, so I think the Fed is one of 3 things, and so it gets its share of the credit, but it's not the whole thing. Whether the Fed likes it or not, M1 growth tracks the stock market. Sometimes one leads the other, sometimes the other one leads. But the Fed going into mini QE is a positive force in the right direction. When we think about the market relative to September, we've also gotten a trade piece, and we've gotten a decreased probability of Elizabeth Warren or an outlier candidate. And those 3 things go into the stock market. And then the fourth thing that is really important is we took a whole foreign policy risk off the table with Iran, where we tested early on in the year what their threshold was and how far they were willing to push the war, and we know that they blinked. And that also helps the stock market.
Now, you know, when you look under all of the issues you just brought up, under the microscope of politics, because everything is so political as we get close to the election, a lot of those become negatives, whether it's foreign policy, even the trade deal. We just had many discussions where the trade deal isn't that great of a deal. Listen, all I know is I can't believe the U.S. is any worse off. And in the final analysis, maybe one of the big issues that gets lost here is how well stocks are positioned as we now move into a better potential capital spending chapter globally. Your final thoughts?
Yeah, no, absolutely. I mean, I think the trade deal, we bought ourselves peace for 10 months. We put enormous pressure on China. They are going to act better. We're going to get some gains out of it on stopping technology theft and other things that take a while to get in. And the capital cycle is set to improve. I think the economy is at full employment, and it's pretty stable, and that's a good place to be right now.
I got you. Mark Summerhill, thank you for joining me today. David Faber, back to you.
Okay. Rick, thank you. Good to see Mark. Now let's send it over to John Fort so we can get a look at what's coming up on Squawk Alley. John.
Hey, David. Well, Huawei, now that phase one of the trade deal is in the books, what happens with the federal government's treatment of that company? It matters to suppliers, and we're going to explore it coming up on Squawk Alley.
Musculoskeletal conditions represent 16%.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Cutting for the net, scores! Along the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right? This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Puts his head down, crashes, and
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action. You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Welcome back to Squawk on the Street. I'm Dominic Chu. New records for the Dow, the S&P 500, and NASDAQ in today's session. Every single S&P 500 sector, as you can see behind me, is trading in positive territory, and stocks right now near their highs of the day. One, though, relative underperformer is the materials sector. You got names like Albemarle, also CF Industries, and Vulcan dragging on that group. You can see there that sea of red in the midst of a sea of green. The worst performer, though, PPG, falling after the paint maker's quarterly results missed analyst expectations. The company noted weak conditions in the industrial markets that it serves. Those shares off by about 2.75% at this stage, so keep an eye on all of those material stocks. Now, I will send things back downtown to you guys, David Faber, at the New York Stock Exchange.
Thanks, Dom. Yeah, PPG, an important industrial bellwether. Yeah. All right, the race for the White House is heating up, of course. One of the Democratic frontrunners has been raking in large donations from dozens of titans of Wall Street and Silicon Valley. Robert Frank's taking a look at that for us and has the story. Robert.
Good morning, David. Well, Bernie Sanders, he won the money race in the fourth quarter with $34 million. That compares to Biden's $23 million. But Biden is way ahead when it comes to big bundlers. Now, the Biden campaign releasing its list of over 200 bundlers, those who have raised more than $25,000 for the campaign so far. And they include a lot of big names on Wall Street, Silicon Valley, and Washington. Now, tech investor Alan Patricof, he makes the list, along with hedge fund managers Jim Chanos and Eric Mindich. Now, from Hollywood, you got Jeffrey Katzenberg and former MGM chief Harry Sloan. In politics, he's got Erskine Bowes. He's the former chief of staff for the White House under Clinton, along with Connecticut Governor Ned Lamont and California Senator Dianne Feinstein. Now, last month, Biden gained two of the pillars of the Democratic money machine. That's hedge fund manager Mark Lazary and investment banker Blair Efron. They had been supporting Kamala Harris, who, of course, dropped out last month. Now, Biden and Buttigieg are the only candidates who have released the names of their bundlers, and the Buttigieg campaign admitting recently that it inadvertently left out over 20 names from their list. President Trump broke tradition in 2016 by refusing to disclose his list of bundlers. In that election, he is once again declining to release his bundlers in the current campaign. Now, Biden's saying that his fundraisers with bundlers and big donors have been open to the media and are, quote, completely transparent. But, guys, you've got the polling race going into Iowa and, of course, in parallel, the money race, and two different sort of approaches to this, with Sanders and Warren taking a grassroots, small donation approach with millions of donors, and Biden kind of sticking to the more traditional big bundlers. Guys, back to you.
Right, Robert. I mean, I guess the individual contribution limit is what,
2,800? Yeah.
2,800?
Yep.
So, you know, Blair Efron or Lazary, they'll get together a bunch of their friends, people who feel obligated to come in and each give that number for some dinner or something like that. Right? That's the key of bundling, I guess. Even if those people they're calling on don't necessarily even support the candidate, they kind of feel obligated to show up oftentimes.
That's right. And remember, with the growth of super PACs, you've got that $2,800 million limit toward a donation to a single candidate. But a lot of those people who go to those Mark Lazary or Blair Efron dinners can also support a super PAC with unlimited amounts of money. So this is just a small piece of what's going to be huge amounts of money pouring into this election.
Robert, we've had a number of Obama administration cabinet members who've come out and endorsed Biden, including former Commerce Secretary Penny Pritzker, I believe just yesterday. Where's President Obama in all of this?
Well, you know, he has suggested that he's going to wait until we have a candidate, until that person is nominated by the party to be the Democratic candidate. So I suspect until that is official, he'll be on the sidelines. But once it is, whether it's Biden, Sanders, Warren, Buttigieg, that Obama will hit the trail hard because that's what he did in the last election as well.
Robert's going to be fascinating, especially when you throw in Bloomberg and his
absolutely an unlimited amount of money. Exactly.
Yeah, that's right. Although still meeting with some tech officials, according to Recode.
Yep.
We're currently at 29.2, S&P 3305. We are really just a few points away from the S&P with a five-fold increase from the Haynes bottom of 666, that crisis low. 5 times the gain. Coming up on Squawk Alley, Comcast and NBCU unveiling its new streaming service, Peacock. Early Google and Facebook investor Roger McNamee's with us on what that means for the streaming wars in a moment.
Real-time exchange sectors are sponsored by
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
On the goal line, Martin scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Puts his head down, crashes, and
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action.
Good morning. It's 8 a.m. at Apple headquarters in Cupertino, California. It's 11 a.m. on Wall Street. Good Thursday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan and John Ford at Post 9 of the New York Stock Exchange. Stocks rallying today with that trade deal, at least phase one, now in the books. Banks earnings season capped off nicely by Morgan Stanley. The Dow closes above 29K yesterday for the first time as we see S&P 3,300 for the first time.
And tech stocks continue to drive this rally. Let us bring in Evercore's Kevin Rippey and Chris Retzler of Needham. Guys, good morning. Chris, the question I've got this morning is, where do you find opportunity in a market that's been roaring like this? You look at the growth fund, also small caps. Are small caps a place where investors should be paying more attention? They arguably haven't run quite as much.
Well, I just spent the last 2 days meeting with about 30 companies, primarily small to mid cap. And the excitement in the hallways at the conference were quite good. The opportunities are very specific, though. I think you have to look at the end markets. You know, data center recovery, I think, is going to be better this year. 5G, we've talked about, infrastructure and devices. But we also see software security. I mean, clearly after the Iranian situation, a lot of those companies started to rally. That threat is not going away. We also see software that helps to optimize businesses. So when you think of retail, a lot of people think of Amazon. But what's powering a lot of the success in those areas that are causing companies to be able to compete with Amazon? There's a lot of information in the background, and those are the companies we were visiting with the last few days.
And maybe some of the big guys still have room to run. Kevin, you've got an outperform on Facebook, which has had quite a run up to this point. What's left that investors haven't considered?
Well, thanks for having me. And with respect to Facebook, I would say the opportunity set over the next year or 2 years remains probably as vibrant as ever. When you think through not just the advertising business, but new opportunities in e-commerce, which Mark Zuckerberg alluded to in his outlook for not just next year, but the next decade, I think that's really compelling. And I think from the standpoint of sentiment, you have the opportunity where investors start to walk back some of the concerns they had about the worst case scenarios in regulatory. So you have the opportunity ahead of both positive estimate revisions and sentiment improvements. So for Facebook, it seems like the runway remains very long, very compelling.
Chris? big return, big rally for semi-stocks last year. Yesterday, you get this phase one trade deal. Simultaneously, reports that there's going to be a greater crackdown on the supply chain where Huawei is concerned for U.S. suppliers. And then just this morning, Taiwan Semiconductor Manufacturing coming out with strong guidance. Are these still a buy?
I think it's something you need to be cautious with. Yesterday at the Needham Growth Conference, there was a lot of those companies that are supplying that supply chain. Huawei is definitely separated from this trade agreement, and I think it should be. I think it's more of a defense. It's more, an extension of the Chinese military, for example. And so I would be cautious in that area, but Taiwan Semi, it's still spending money. There is a technological war there with Intel and Samsung and who can get to the smallest nanometer chip, and they are spending money. Now, what we would really like to see further in this year is a recovery in spend for the memory guys, the DRAM and NAND, which I think would then be able to continue that spending trend, but we haven't seen that yet. So they have moved very far quickly. It wouldn't surprise us to see some correction in that area. And in fact, I think it'd be really healthy to have the extension of that bull rally, but to have some pullback that would give a better entry point for new investors to get involved.
Kevin, what is, if any, the 5G play in 2020 that investors should be paying attention to? What stocks are going to actually move on the rollout and potential upside in 5G infrastructure?
Well, I don't want to disappoint anyone with perhaps a boring answer, but what I would say is for consumer internet, the opportunity in 5G is probably less than perhaps in some of the hardware sectors. When you think through Google, Facebook, all of the app ecosystem, that likely doesn't really change with respect to 5G. I mean, LTE serves, I would say, a pretty compelling speed, enables a lot of the technologies. Maybe you think through 5 years out, and there are new, novel opportunities with respect to VR and AR, but I don't think you get that in 2020, and you probably don't get it in 21. So probably wait and see with respect to 5G as a catalyst for consumer internet.
Yeah, I do wonder, Kevin, though, if places like gaming are where you could see like the biggest or greatest adoption on a consumer side, at least initially. You have an outperform rating on Lyft, target price of $81. Why do you like it?
Well, I think the same logic applies to both Lyft and Uber, which is going to be you have a rationalization of the competitive dynamics in the United States. And I think from that standpoint, you have improved take rates. And when you look at the Uber and Lyft models, what you really have is an incredible amount of leverage on take rates. So, 100 basis points improvement of what Uber and Lyft can take from the overall ecosystem can drive, for Uber, $1 billion in EBITDA. So when you think through what the rationalization could mean, a reduction in the promotional activity we've seen over the last few years, those become very compelling. And let's be honest, sentiment around ride sharing and around some of the venture-backed recent IPOs is not great. So again, opportunity for sentiment revisions and improvement as well.
Chris, what's the biggest pothole in the road in 2020 that investors should be worried about, and kind of what quarter or what month do you expect for us to really see whether it's a significant danger?
Look, I think some of the real risks are, typically a tweet away. Are we going to throw up an embargo on certain companies? I mean, we saw that last year with Huawei, and I think for tech investors, that is something that we've now seen, and we can see the impact. So that's something I'm really very much concerned about. The discussion with ASML and the pressure they were feeling on selling tools into the Chinese semiconductor manufacturing space. Those are real risks. Those are kind of black swan events that we need to pay attention to. But otherwise, we're in an election year, and I think people want to get reelected, and we're going to see spending out of the government, military modernization on our front. Those are all real positive trends that I think as an investor I can get behind.
Are you investing in military modernization? Are there names you like in aerospace and defense right now?
Yeah, there's a lot. So jamming, right? So if you can spoof our military out there, there's new technologies that are being developed, that are being put out in the battlefield that are protecting our soldiers, precision-guided missiles that have much greater precision. So there's a lot of activity out there, but they're just not your household names.
All right, a lot for investors to watch. Kevin, Chris, thanks.
Thank you.
When we return, we are only hours away from the unveiling of Comcast's foray into streaming with Peacock. What to expect this afternoon and why NBC is betting big on ads. Early Facebook and Google investor Roger McNamee weighs in. That's coming up next.
I am a peacock! You gotta let me fly!
Whether you've enjoyed the legendary terrain and Telluride.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
You know what it's like when you can't find your debit card? Panic. That's what it's like. Until you realise, as a Halifax Visa debit card holder, that you can freeze your card on the spot. Control your Halifax Visa debit card with the Halifax mobile app. Easy as.
You can only freeze certain transaction types. Terms and conditions apply.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
This week on the New Yorker Radio Hour, has Silicon Valley changed since all the revelations about the world's social media companies?
I think people are really reluctant to relinquish this narrative of being underdogs, of being innovators, of just trying to experiment and make the world better.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Comcast and NBC Universal set to unveil the company's streaming service Peacock at an investor meeting later this afternoon. It's news out of our parent. Julia Borson has more with what to expect. Hey, Julia.
Carl, that's right. At 4 p.m. today, CNBC's parent company, NBC Universal, will unveil Peacock. That's its new streaming service set to launch in April. And this will all be at Comcast's investor presentation in Manhattan today. Now, the ad-supported streaming service is expected to include a free option. Investors will be eager to learn how much content will be included in this free tier, the pricing of other tiers, and how the service will be bundled with Comcast's cable offering to incentivize consumers to keep paying for TV. The key differentiator of Peacock is ads. NBC Universal is betting that people would prefer to watch some ads rather than pay for another streaming service like Netflix or Disney+. And NBC Universal will focus more on its deep library of popular shows such as The Office rather than spending big on a slew of new originals. NBC Universal has said it will spend about $2 billion over 2 years on Peacock. It's planning to break even by year 5. In contrast to Apple TV and Amazon Prime Video, both of them spending around $6 billion on content last year. And a new report out from BMO today predicts Netflix will spend $17 billion on content this year. Now, with its new service, NBC Universal is looking to tap into growing demand from advertisers. eMarketer projects U.S. marketers will increase their budgets for ads on connected TVs by 28% to nearly $9 billion this year. And the media giant is looking to avoid subscription fatigue. Nearly 60% of Americans say they won't pay more than $20 a month for streaming services. That's according to a report from ad tech company The Trade Desk and YouGov. So, Carl, if you think about how much people already are paying for Netflix and HBO, it makes sense not to try to burden them with another paid streaming subscription option.
All right, we're going to see if that strategy works, Julia. Thanks. It is a big bet on ads as part of the strategy in streaming. Talk more about this morning. Let's bring in Elevation Partners' Roger McNamee, early Facebook and Google investor, and get his take. Morning, Roger. Good to see you.
Great to see you, Carl.
Strategically, does this make sense to you?
Oh, I definitely think that the pricing strategy is the way to enter the market. mean, Peacock is not one of the first ones in, so it has to go into a very crowded space. Having a free option is a complete no-brainer. To me, the real question, not just for Peacock, for everybody, is how differentiated is the content? Because of the local affiliate network of NBC, it's going to be hard to bring the prime content onto Peacock, and at least not in a way that harms the local affiliates. And so I'm not sure how they're going to walk that particular line, but I definitely think that this notion of the free, the advertising supported version is absolutely the right way to enter the market.
Are you saying the affiliate dynamic makes this more of an innovator's dilemma than we might have seen at rivals?
Well, think about it for just a sec. I mean, Netflix doesn't have anything to worry about there, right? So they put all their best stuff right out in front. If you think about Disney, of course they've got, things related to television that they have to protect, but they have the whole Disney film library, the Marvel film library, and all of that. So they have a lot of unique content. And the question is, how does Peacock compete with that? Is The Office enough to get that done? And I think in an ad-supported model, it's definitely enough to get you started. But what happens as this market shakes out and people stop being, the $20 threshold that Julia just described? I don't think that's going to last. My assumption is you're going to see people moving from traditional video distribution to streaming, and their budget's going to move away from cable, which is going to create, as you say, this innovator's dilemma for not just Comcast, but for others who are really successful in the traditional distribution model.
Hey, Roger, it's John. I would bet that we're on the verge of a great rebundling, right? People say, I hate the bundles, it's too much, blah, blah, blah. But there are all these services. Eventually, people are going to say, there's all these services. Why can't somebody put them all together for me and charge me a little bit less? Do you agree? And if so, what type of company, what type of player is going to be best positioned to be that bundler, that biller who kind of controls the experience in the pocketbook?
Hey, so John, I don't know how long it takes for that rebundling to happen. My guess is you have to have a bloodbath first, that you're going to have some people who realize that they're losers and are willing to surrender their autonomy to someone else. So while I agree with you long run, I think the immediate play is that you're going to see the folks like Comcast, like Disney, like Apple, spending big piles of money to secure a leadership position in the hope that they will be the bundler. And what happens over the next 3 or 4 years feels to me like a consumer paradise where, there's a lot of confusion, but there's going to be an amazing amount of new content. I mean, I don't know about you, but I was really surprised pleasantly by how good Apple's original television programming was on Apple TV Plus. And can they sustain that? I have no idea. Obviously, Amazon's done better than they might well have done, and Netflix has done fantastically. So I think from a consumer's point of view, you're going to spend a period of time here with people thinking they're the winner, and you're going to just have to do your own bundling. But the effect of that will be, I think, to change the mix of programming that people consume. And I wonder if sports is not one of the things that suffers from this, because it doesn't feel like that's getting, the sports treatment here has been very high-priced premium services. And, there's a small but very vibrant market for that. And I wonder what happens as we rebundle to the amount of sports that people consume.
Yeah, the live component there is truly a game changer when it comes to sports. Roger, you mentioned Apple, and we've got this growing rift now between the company and the DOJ as they refuse to unlock these 2 iPhones that belong to a shooter who opened fire on a naval base in Pensacola in December. Obviously not the first time that they've restricted access to encrypted data. It's deja vu in a lot of ways. Do you see this ending any differently this time?
One never knows, but I don't think the issues have changed at all from Apple's perspective, which is if they create a backdoor for law enforcement, they're effectively creating a backdoor for everyone, which means criminals, but it also means the government of China, the government of Russia are going to have much easier abilities to penetrate phones. And that raises the threat to every user of smartphones. I think the argument that DOJ has here is very weak. We live in this time of surveillance capitalism. Everything you do on your phone touches the network in some way. So that to the extent that they're trying to track who did the shooter meet, where was the shooter at any point in time? Any kind of interactions they had, all of that stuff exists out in the environment. It's easily accessible to law enforcement with a warrant. They don't need the phone. There are a small number of things that are captive inside the phone. Some photographs, for example, if the shooter did not have Facebook, did not have other things that automatically download your photographs, then there may be some photos in there that are unique. But as a generalization, I think Apple's position on this is exactly correct. And I think DOJ in some ways is just manufacturing. It's trying to use other issues to keep people's attention away from, shall we say, the news of the day.
I do wonder, though, Roger, if this is the DOJ and Attorney General Barr trying to at least drum up more of a debate and get ahead of this bigger, broader trend we're seeing in technology right now, which is more encryption. I mean, look no further than Facebook. Does it warrant debate as we see that become a bigger and bigger part of how people turn to their phones, turn to their apps and communicate?
No, Morgan, I absolutely agree that there should be a debate. My view on this debate is that the balance between what DOJ is asking and what the industry currently is advocating strongly supports the industry's position. And at the end of the day, people need to have some sanctuary, some opportunity to live their lives without being scrutinized every moment of every day. And where that comes down is the debate we're having right now. At the moment, if you think about it, it's not the government that we have to worry about. It's Facebook, it's Google, it's Amazon, it's Microsoft. It's the folks who are the surveillance capitalists who are invading every aspect of our lives. So that is the debate I've spent 3 years trying to make us have, and I'm glad to see DOJ engaging in it, but you know my position.
Yeah, I'm not sure they are really engaging in a debate, guys. Somehow the government seems to consistently position themselves against encryption for everybody except the government itself. And I think there are a number of people out there, security researchers, Bruce Schneier, who I followed for a long time, who would argue, especially in the 5G era, encryption is the only answer. You have to assume a dirty network. You have to assume that lots of people are trying to get access to your data, so there have to be ways to protect it. I question whether the government is going in the right direction, kind of villainizing encryption that they can't break.
You've already been
John, you're absolutely right
today.
Yes.
Yeah, John's absolutely correct. Bruce Schneier is the guy to pay. He's my guru on this topic, and this is only going to become a bigger issue.
Roger, good stuff. Always good to see you. We'll talk soon. Roger McNamee.
My pleasure.
Well, getting some data out of the NRF on holiday retail sales. Courtney Reagan has that for us back at HQ. Hey, Court.
Hi, Morgan. So this is the final holiday sales number, the one that the industry uses as the benchmark. And the National Retail Federation says that holiday sales for 2019 rose 4.1% to $730.2 billion over the year prior. So that's $29 billion more than what we saw last year. And you might remember last year we had a bit of a weaker result than most had expected. We had a government shutdown and some kind of noise in the numbers. Last year's growth rate was only 2.1%. This year, 4.1%. Online sales alone were forecast to grow between 11 and 14%. And according to the National Retail Federation, did grow 14.6%. And then that total number, that 4.1%, was right in the higher end of their range. They had forecast we'd see growth of 3.8 to 4.2%. Back over to you guys.
All right, thank you, Courtney. And still to come, why the Federal Reserve is sounding the alarm on a new type of fraud, one you've probably never heard of. We will tell you what the fastest growing financial crime hitting banks is next. Don't go anywhere.
Hey there.
This ain't just lunch. It's the KFC fill-up lunch for $1.99. It's mighty fine. Tingles your spine, so jump in line because it's time to dine on a mini fillet burger, 2 hot wings and fries, all for a fist-pumping $1.99. What the... The KFC fill-up lunch every day until 3 p.m. at participating restaurants every day from 2nd to 26th of January until 3 p.m. only, subject to availability.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
This weekend, Volvo are offering 0% APR finance on a Volvo Select approved used car, which means this weekend, 0% of household chores will be finished. So visit your local Volvo retailer this weekend and drive an approved used car with 0% APR finance back home, a messy home.
Used vehicles up to 4 years old. Participating retailers. 50% deposit on minimum £7,000. Conditional sale. Terms, eligibility, guarantee requirements and conditions apply. Volvo Car Financial Services.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Down the middle of the 10, got to the 5, tumbles in, touchdown!
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown! On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, and a shot,
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back to Squawk Alley. A new type of fraud is now the fastest growing financial crime hitting banks. Kate Rooney explains from One Market. Kate.
Hey, Morgan, the fastest growing and one of the hardest to detect. It's called synthetic identity fraud. Instead of outright stealing an identity, a criminal makes one up. It's sometimes called a Frankenstein ID. Criminals randomly pick or they can buy a social security number. They link it to other fake information like a birthday, for example, then slowly build credit over multiple years. They open accounts with financial institutions, take out credit cards or auto loans with no plans to pay those back. Notre Dame Federal Credit Union was one of the many caught off guard by fraudsters.
These look like bona fide real people. Again, looking at them one-off, they looked great. But when you pooled all of them together, especially out of the specific geographic area that this fraud group was working out of, you know, all the red flags and alarm bells were going off.
Analysts tell me that smaller lenders like Notre Dame are especially at risk because they don't have the same resources to spend on cybersecurity that the big banks have. I spoke to one Fed official who says it's largely underreported because there's no consumer knocking on the bank's door complaining that their credit is going haywire. Lenders write it off mostly as a credit loss. Some in Silicon Valley out here are tackling the issue using data. I spoke to the founder of Centilink, a startup working with major banks to verify customer identity. Centilink estimates this is hitting lenders to the tune of $2 to $3 billion per year. Analysts telling me the issue is getting worse as applying for credit mostly moves online. Issuers are also loosening their borrowing standards in this recent economic boom. Guys?
That is amazing. Kate Rooney, banks getting catfished. Who would have thought? Great story and great insight. Kate Rooney.
Thanks, guys.
European markets, meanwhile, set to close in just a couple minutes. Seema Modi's got the breakdown of today's action so far overseas. Seema.
Yeah, John, record highs here in the U.S., but most global markets are brushing off the signing of the Phase 1 U.S.-China trade deal with stocks in China. Little changed. A similar story in Europe where major indices are down fractionally on the day. In Germany, GDP growth in 2019 for the full year dropping to a 6-year low, 0.6% versus the 1.5% 5% growth seen in 2018. Meantime, Glencore is reportedly in talks to strike a long-term contract with Tesla over cobalt shipments for Tesla's new factory in Shanghai. Now, analysts say the deal would help Tesla scale production and increase battery supply as more automakers invest in electric vehicles. Glencore is the world's largest cobalt miner, and it's already struck cobalt contracts with BMW and other key battery makers. That stock up fractionally on the day. Lastly, guys, central bank easing. That story continues in this new year. Turkey cutting its interest rate to 11.25%, its fifth consecutive rate cut, while South Africa lowered its rates by 6 to 6.25% amid a sharp slowdown in its economy. Guys, back to you.
All right, Seema, thanks. Let's get a news update as well across the room. Sue Herrera's got that at HQ. Hi, Sue.
Indeed, I do. Thank you, Carl. Here's what's happening at this hour, everyone. The federal government's watchdog agency, the Government Accountability Office, says the White House violated federal law in withholding security assistance to Ukraine. The freeze is at the center of the impeachment of President Trump. Harvey Weinstein and supermodel Gigi Hadid arriving at court as jury selection continues in Weinstein's sexual assault trial. Court officials, though, confirming Hadid is no longer a potential juror in the case. A new survey data shows millennials are the least likely to get the flu shot. More than half said they didn't get the shot this year, and of those, a third said they won't get one at all. And Mariah Carey has been inducted into the Songwriters Hall of Fame. She has co-written 18 of her 19 #1 hit songs. Joining her in the 2020 class, the Neptunes, Annie Lennox, Dave Stewart, the Isley Brothers, Rick Knowles, Will Stevenson, and Steve Miller. Congratulations to all of the above. That is the news update this hour. I'll send it back downtown to you, Carl.
There's a lot of talent in that list, Sue. Thank you.
There really is.
After the break, chip stocks getting a boost this morning following that trade deal yesterday. We'll break down the biggest values in the sector as the S&P is in a tight range today, 3305.
Take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada. Or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
This is not a cat. This is not a rocket. And this is not a sail. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Do you remember? Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 6-pack of apples from 69p to just 49p. All this week at Tesco.
Selected larger stores subject to availability. Offer ends 20th of January.
Down the middle of the 10, got to the 5, tumbles in, touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stop, TuneIn has you covered.
Puts his head down, crashes, spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Welcome back. With the ink drying on the U.S.-China trade deal, the focus now shifts to Huawei. Deirdre Bosa explains from One Market. Deirdre.
So, Morgan, the trade deal, it offers very little relief to Huawei, and there's been a number of Huawei developments that threaten to put U.S.-China relations back on edge. Now, the Chinese tech giant remains on the export blacklist, and the Trump administration is reportedly seeking to tighten restrictions on the company by eliminating a loophole that has allowed U.S. companies to sell to it. Now, meanwhile, the U.S. continues to pressure governments in Europe to ban Huawei equipment as they build out their own 5G networks. Huawei is fighting back as Germany debates whether to allow its equipment. The Chinese ambassador to the country said that were Germany to take a decision that does ban Huawei, there, quote, will be consequences. Now, despite pressure from the U.S., UK Prime Minister Boris Johnson hinted this week that he will not ban Huawei. All this to say, guys, that the next few weeks and months, we'll see decisions in key European markets that could put Huawei squarely back in focus. Now, remember that Huawei is a familiar bargaining chip, one of China's biggest and most important tech companies. It leads the global field in 5G equipment, and it's the world's second largest smartphone maker. The U.S. campaign to erode its dominance has really taken a toll over the last year, the company forecasting a difficult year ahead. To top it all off, guys, Huawei CFO and daughter of its founder, Meng Wanzhou, will be back in court on Monday for her extradition trial. And this is a case that has already been dragged into the politics of the trade war and could again pressure relations. Back to you.
Deirdre, thank you. Chip stocks, some of the biggest winners from yesterday's trade deal signing. Several CEOs, such as Micron, Sanjay Mehrotra, and Steve Mollenkopf of Qualcomm were in the room during the event. Let's break down the biggest winners and losers in semis. RBC's Mitch Steves joins us now, along with Vijay Rakesh of Mizuho. Good morning to you both. Mitch, I'll start with you. We saw semis sell off on the heels of that signing yesterday, but rallying today. What are the names that could be the biggest winners and losers?
Yeah, so for 2020, we're sticking with our memory call. We think Micron and Western Digital will work higher this year. We still like AMD and NVIDIA for the data center side, and then our 5G play is a company called Analog Devices. Our view is that even though there's some issues with Huawei, a lot of these companies are running with very, very low inventories. They had no clarity on tariffs. At least that is now cleared up, so people can increase their inventory levels. So 2020 is probably a very large growth year for semiconductors in general.
Vijay, how much is the risk around a supply chain or greater supply chain decoupling where Huawei is concerned for U.S. chip stocks? How much is that already priced into the names with the most exposure?
Yeah, thanks, Morgan. So I think as you look at 2019, a lot of the semi companies were worried about Huawei and the outlook there and trade concerns and recession risk. As you look at 2020 here, most of the Huawei contribution has been taken out. So most of the suppliers today have little to no exposure to Huawei. So if Huawei gets a reprieve in the second half, we think that's an upside. If they don't get it, fine. So I think as you look here at 2020, we think it's more about some tensions cooling down, a much better return to growth, much better fab utilizations, all driving earnings up for the semi group overall. So we think Huawei will be less of a concern because it's out of the numbers for a lot of the semi companies here.
Mitch, does the Apple versus the government conversation when it comes to encryption have implications for chips? Meaning, one way or the other, if we start to have policies where different governments want access to different types of data and information, does it affect the market for devices and the free flow of commerce?
I don't think that'll impact the chip sector. I think that's more of a software issue in terms of them handing over the keys, I guess, to the information that the government may be looking for. But in terms of chip stocks, it's not going to make a big difference. At the end of the day, you're still going to have to increase your sales of smartphones because you're going to move to 5G. You still have very, very low inventories across the board for all chips in general. And so we think that as smartphones ramp up over 2020, on top of data center spending coming back, you've got a lot of growth drivers for semis, particularly with the high beta names like AMD, NVIDIA, and Xilinx, for example, is another good example of a data center play. So we don't think it's that big of a deal. I mean, it's just another legal overhang, but it has nothing to do really with the unit shipment. It has more to do with the software and security code associated with Apple.
So Vijay, given the conversation, all the different conversations we're having that can affect the chip sector this year, and not to mention the run we've seen in the stocks in 2019, what are your top picks?
Our topics are pretty similar. We think auto industrial names will be acting a lot better in 2020 after a pretty dismal 2019. So on semiconductor and XPI, again on the data center server side, we think the names to focus on will be AMD and NVIDIA. And also on the memory side, I think Micron, Western Digital, I think those will be the names to focus on. We are more neutral on Xilinx because we think data center would help them. But again, data center is only 7% of their revenues. So the big impact would obviously be Huawei, where they don't have any exposure, and Huawei seems to be moving to ASICs.
All right. Mitch and Vijay, thanks for joining us today.
Thank you.
And as we head to break, let's get a check on where we stand across the major averages, all higher by a little better than 0.5%. The S&P right at about 0.5%. And meantime, can't get enough Squawk Alley? Well, not only can you watch us live on the app and on your TV, you can watch us delayed as well. So go ahead, download the CNBC app on your app store of choice. We're back in a moment.
Sometimes the...
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
From dancing through the streets to the pulsing heartbeat in Brazil, to heading out on a safari in South Africa, or exploring the cultural delights of China. Wherever in the world you want to be, you can get there from your doorstep with KLM Royal Dutch Airlines. Book your dream deal at klm.com by January 21st and fly via Amsterdam from a choice of 16 UK airports. Make your dream a reality with KLM.
It's a new day. Grab the bull by the horns of ambition. There's two yous in future. Which do you want to be?
Or leave the motivation to Vitality. With our health insurance, you could get the Apple Watch Series 5 to keep yourself on track. From just £99 up front with nothing more to pay if you do your weekly steps. Search Vitality Apple Watch. Life's better with Vitality. Upfront payment varies starting from £99. 18 plus selected models only. 24-month credit agreement, variable direct debit. Available on certain Vitality plans. Minimum premiums, terms and exclusions apply.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
I'm Scott Wapner. Here's what's coming up halftime before top of the hour today. Stocks surging again. The S&P topping another key level. So we'll ask Ed Yardeni and the investment committee how far stocks can climb. Plus, the Stock Chart gang is buying today, and there are several to reveal. You don't want to miss that. And a big blow for a regional bank. It's our call of the day. We're going to tell you which one just got chopped. We'll do it at noon. Morgan, we're about 20 away. We'll see you then.
Chopped. All right. We're looking forward to it, Scott. Thank you. It's been a decade for delivery, or a decade of delivery, for companies like Uber, DoorDash, Postmates, and Grubhub. But some analysts say that only 6% of the $350 billion food delivery market has actually been tapped. Frank Holland joins us right here at Post 9 with what the future holds for food delivery. Frank.
Hey, guys, a lot of current challenges, but also a lot of opportunities. The market for food delivery, it's actually projected to grow to $467 billion over the next 5 years, a 31% increase. But those estimates still only project that 13% of restaurant spending will be used for food delivery. And today we have an exclusive look at the growth of the four leading companies, DoorDash, Grubhub, Postmates, and Uber Eats. According to Second Measure, DoorDash captured 33% of the market in 2019, showing tremendous growth, 143% year over year. Grubhub, the leader in 2018, only seeing 4% growth. The industry overall is growing. Use of these companies is projected to increase from 70% of online orders to 85% by 2025. But some other trends could have a big impact on this industry that has thin margins and a number of companies that have yet to be profitable. While usage has increased double digits in each of the past 5 years, the growth of spending on those orders, it continues to decline. The use of aggregators could be a driver of that trend. There's a site called Food Boss that allows users to choose services based on cost or speed for the restaurant of their choice. You kind of think Expedia, but for food delivery. Google Maps also offers some similar functions. Millennials, they make up 70% of online delivery customers, so the future of this industry could largely be impacted by what feature is the most important to millennials and something I like to call pizza penetration. 57% of delivery orders, they're still pizza, and we know a large majority of them are mom and pop. They still take orders over the phone the way they always have.
And pizza travels well. That's important.
Yeah.
You think about food delivery, but that's amazing. A third-party referral to third-party delivery. That's
an interesting concept.
Yeah, right?
Well, you know, that's part of the problem for this industry. Those so-called promiscuous diners, the Grubhub CEO, he kind of coined that phrase. When we look at the numbers, it's just so much crossover. There's so much crossover, especially from Grubhub to DoorDash. And that's a large reason why the market share changed so dramatically. You're seeing it right here. You know, a quarter of Postmates customers, they also use Grubhub. A third of Postmates customers use DoorDash. So there's a lot of crossover between the industry.
You know, it's amazing because we talk so much about economies of scale. And just to go back to the other graphic you had, I was quite surprised to see that Uber's only in, 500 cities? Everybody else, it's thousands of cities.
Right. Well, the thing is that some of these companies, they're really focused on food. Others are focused on delivering all types of things long term. You talk about a Postmates, they want to deliver groceries. They want to deliver things from IKEA potentially. They want to deliver all kinds of things. While other services, they're just like, hey, we're going to stick to food. We're going to stick to our core business.
Some are going horizontal, right? Like you mentioned, delivering all kinds of things. Some others are, some of the same even, are going more vertical. Ghost kitchens attaching to this. I mean, the business model is probably going to look a lot different in 5 years, one way or the other, right?
Yeah, absolutely. You know, ghost kitchens is an interesting development that I think everybody's kind of keeping an eye on, because overall people are spending less when it comes to delivery, but the spend on restaurants themselves, that's flat. So the question is, where does the money come from for these ghost kitchens? Do people still go to restaurants? There's a certain percentage of people that will always just want to go to a restaurant, sit there, have a glass of wine, enjoy themselves. So when you see all these ghost kitchens pop up, the question is, where are they going to get revenues from?
And of course, the other key question is that last mile delivery, how it's actually going to get delivered to you in the future as well.
You know, the future is very interesting. So we have some video, actually pictures from my alma mater, University of Pittsburgh. I have to give it a shout out. They actually have a delivery robot on campus right now that you can just deliver to. You can get food from campus eateries. I was waiting for the picture. The pictures are amazing.
We had it for a
second.
Yes.
I love these pictures, and shout out to Pay. I got to send a shout out to him.
Amazing. Drones, robots, and human beings.
It's pretty fantastic.
Bringing our food to us. It's
what a world we live in.
Yeah, it's true. Frank, thanks.
Thanks, guys.
When we come back, do real men not rent? We're going to explain and debate that with the style editor of GQ in a moment.
We've been profitable since 2014. Even during this time, we've been using that profitability to put it back into our business and to be able to expand our business into men's, the UK, kids. We are now doing some product innovation. And so our philosophy has always been that we want to be able to be profitable and then reinvest that profitability into our future.
Everything changed the moment.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
Down the middle of the 10. Got to the 5. Tumbles in. Touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Extended the ball, and he got it in. Touchdown.
Puts his head down, crashes and spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown.
On this week's On the Media, tips and tricks for how to inoculate yourself against war propaganda.
If you watch Fox News, you see what can be fairly characterized as war lust. I shouldn't even say Fox News alone because it does permeate everywhere. And you're really got to watch out for that.
War themes and memes on this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Okay, do real men really not rent? And I'm talking about clothes here. That is the thesis from the New York Times as clothing subscription companies, rental companies like Rent the Runways struggle in the male demographic. Joining us now here at Post 9 to debate it, GQ style editor Cam Wolf. Cam, good to have you.
Thanks for having me.
So I would argue that if men don't rent, it's because we're too insecure to do it, and because the culture is, I'm not going to feel that bad if you're wearing the same shirt I am. It's like, oh my gosh, he's got on a white dress shirt. I'm wearing a white dress shirt. It's not quite the same culturally for women if somebody's wearing the same dress at a party.
Absolutely. I think I agree on your second point. What do you mean when you say that they're too insecure?
I think it takes a certain amount of confidence to say, you know what, I want to go for this bold piece. Maybe I don't want to spend all the money for it, but that's really going to tie this outfit together. I just need it for this one night, but I'm going to look fabulous. I think most guys don't care that much about looking fabulous.
Tuxedos accepted, right?
Tuxedos accepted. That's one time when women in our lives, my life, I'm speaking
yes.
Whoever's in your life is forcing you to look fabulous, so yes, you will rent it. But otherwise, most guys are just kind of like, I look okay.
I think absolutely the rental market is aimed at those big, bold, the really trendy pieces that maybe are only going to be relevant for a couple of months, but for the time being are super hot.
Do you think it has anything to do with the fact that guys may not want to wear clothes that have been worn by somebody else before?
I think the New York Times story addresses that sort of head on and says no, although I think for a lot of what's popular right now for men, whether it's sneakers or, Supreme T-shirts and streetwear and all that, those are trickier items, I think, to rent. You don't want to be wearing T-shirts tend to get a little messier, a little dirtier than, a coat or...
Right. Don't lose that train of thought. We're just getting some breaking news regarding the Labor Department and the degree to which reporters will have tools to break economic data. Our Elon Mui's watching that. Elon?
Carl, the Bureau of Labor Statistics has announced that it will no longer allow news organizations to bring computers into the lockups for the major data releases. And this could impact outlets, particularly like Reuters and Bloomberg, that do rely on that near instantaneous transmission of the information to their readers and to their users. Now, a senior BLS official said that they are particularly worried about an inequitable trading advantage that the lockup could provide to firms that preload the data in a way that's readable for high-speed trading and for algorithmic trading. They say that they want to eliminate the competitive advantage that creates for those firms. So this will take place starting on March the 1st. This has been a long-time recommendation of the Inspector General. The BLS says that there was no specific incident that prompted them to make this change now. But again, it will take place on March 1st. News organizations will no longer be allowed to bring computers into the lockup. Back over to you.
Elon, you bring us the jobs number every month. I can ask you directly here whether or not this puts you at a disadvantage as a reporter.
There is no change for the TV and video lockup. We already, both print and video, were no longer allowed to have any kinds of electronics like cell phones or wristwatches. We had to use the old pen and pad in order to bring you the numbers. And so what BLS is saying is that this puts both video and print on even footing now. No one will be able to use computers.
Elon, thank you. This is an interesting step backward, some might argue, in an increasingly digital era, getting a sense of what rules you have to have in place to ensure an even playing field. I wonder how, if at all, this impacts people who are trading on this information. I mean, I'm sure that the wires will figure out different ways to argue that they're faster and get the information out regardless.
Yeah, exactly. And you're talking about seconds, milliseconds, nanoseconds, that information can make a difference for trading. So it's going to be really interesting to see how this plays out come March.
Maybe they'll bang on trash cans to get the data out.
All right, back to renting. You said you wouldn't know where to go. Why isn't Rent the Runway? Why would that not be your first stop?
Rent the Runway doesn't offer men. Yeah, right. They've made a very successful business renting to women, but I think even they mentioned that New York Times story that men just isn't really in their sights.
You think it's going to change?
Yeah.
For them?
For anyone.
For anyone,
Is there a big business opportunity here? Half the population's not being targeted.
I think there's a medium-sized opportunity because I don't know if you're going to get most guys sort of buying into this, but I think on the bleeding edge of guys who are really into fashion and care about it, this is definitely something that would be of interest.
I'll tell you what, the summer before my senior year of college, I was interning in Myrtle Beach. And that was my first, the environment was so club focused and who looks like what. I got a little bit of the taste of the experience of what it's like to have the kind of scrutiny that young women have. We, as guys, were trading each other's clothes. I think the culture could move in this direction. If guys maybe get even more insecure, they'll be driven to raid each other's closets, rent clothes. I think it could happen.
Well, also as male fashion diversifies away from the suit, right?
Yes.
As we go casual, that does broaden the universe of what's possible.
Absolutely. Right? And I think, that's sort of what I mentioned too with the streetwear too, is that's what's so popular right now, but I just don't know that those are items that you would be interested in renting.
Yeah. I mean, I would shop in your closet, Carl. Slightly different
and vice
sizes,
versa.
Yeah, there we go.
Wow.
We could start the trend.
I mean, you're both very fashionable, so I can see it.
All right, I think, are we going to Kayla here?
Yes.
As we talked about the Labor Department move, and now we're getting some Senate vote on USMCA. Kayla Tausche's got that. Kayla?
Carl, the latest tally on the USMCA vote, 89 yeas, 9 nays on the Senate floor, more than enough votes to pass the USMCA into law, ratify it as a treaty once the president signs it, which we anticipate could happen later today. There are a few notable Democratic senators who are voting against this deal in the wake of Senator Bernie Sanders earlier this week at the Democratic debate saying that the deal is a modest improvement, but it doesn't address climate change, and therefore he won't vote for it. Following in that wake, Senator Chuck Schumer, the top Senate Democrat, as well as Kirsten Gillibrand and a handful of others, acknowledging that it does make some solid gains for labor, but it does not mention climate change, and therefore they cannot vote. But an overwhelmingly bipartisan vote here to pass the USMCA on the Senate floor following the House's vote late last year, and we anticipate the president will sign it in short order. Guys?
What a week for trade it's been. Kayla Tausche, thank you for bringing us the latest on USMCA. Still ahead, a new ice cream flavor for streamers. We're going to explain that next. Squawk Alley returns in less than 3.
Who says our bank isn't?
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa, On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Puts his head down, crashes, and
the snap is good. The hold is good. The kick is on its way. It is good.
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action.
In case you missed it, Ben & Jerry's introducing a new flavor of ice cream. This one's in honor of a certain streaming service called Netflix. It's called Netflix and Chilled. We actually got some. I don't know how we got our hands on this, whether it was sent or we bought it. John's already finished.
Yeah, it's under, it's relatively small. If it's a gift, it's low dollar, so I think we're okay ethically. It's pretty good. I will say, Netflix and Chilled, that's a nice kind of tongue-in-cheek implication there. I don't think this is for streamers. I think this ice cream is for lovers. Like, if you're a, if you're a kid
if you don't have a peanut allergy,
give that as
or
a gift.
Gluten allergy.
It kind of sends a message to that special someone.
Yeah, I think it's peanut butter ice cream with what? Pretzels, brownies in here.
Packed into peanut butter ice cream. There is a non-dairy option made with almond milk and vegan ingredients.
Get out of here with that, though.
They point out...
but no popcorn. You'd think popcorn if there's streaming involved.
It's available apparently around the world, online and in their scoop shops as well. You like? It's all good, right?
It's tasty.
I like it.
I tell you, it beats the bugs that we were eating on this set a couple weeks ago.
Yeah. Don't give John Chambers any ideas for new ice cream flavors, but I like your popcorn one. That's pretty good.
Earnings next Tuesday, I think, right? Tuesday, Wednesday? Let's get to the judge in the half.
All right, guys, thanks so much. I'm Scott Walker. Front and center this hour, stock surge. The S&P crossing 3,300 for the first time ever. The rally now in full gear, so how far can your money go? It is 12 noon, and this is the halftime report.
Record highs, soaring valuations. Is this market getting too rich? And is there anything that still looks cheap? Hitting the brakes, Tesla downgraded by a longtime bull. The road ahead for the stock. A slew of chip names getting their price targets raised. The traders take their positions. Morgan Stanley soaring on its big earnings beat, but U.S. Bancorp downgraded. We'll debate in Call of the Day. The investment committee is ready to go. Halftime report starts right now.
And it is good to have you with us today. Our investment committee here, Jim Leventhal, John Najarian, Steve Weiss, Jenny Harrington, the CEO and portfolio manager at Gilman Hill Asset Management. Liz Young is back, BNY Mellon, Director of Market Strategy. Also with us on set today is Ed Yardeni. He's the president of Yardeni Research. Let's begin with the rally. Stocks hitting more record highs today. The Dow coming off its first ever close above 29,000. Liz Young, I said the S&P above 3,300 for the first time. Is it time to buy or is it time to worry?
I am an incurable optimist, so not really ever time to worry that much. And I say this all the time, you must be present to win. So I always believe you should be in the market. I still think there are places that you can buy stocks. And I know Josh Brown, big friend of the show, I think he posted on Twitter yesterday, the market isn't ever due for anything. We shouldn't pay so much attention to the calendar. We shouldn't pay so much attention to the fact that it's been a long time or things have gone on for a long time.
You got to pay attention to valuation, though, right?
End. Not as much as we used to.
Yeah.
I don't even know. I mean, with monetary policy support and all of the macro tailwinds that we've had up until this point, it doesn't seem to matter as much. If we paid attention to valuation, value should have outperformed growth for the last 5 years.
What do we think about that statement? That's a bit of controversy maybe thrown into the mix today. Ed Yardeni, Bank of America today, says S&P PE hasn't been this high since 2002. Its PE to growth ratio is at an all-time high.
Well, I look at the forward PE. The forward PE is actually back to where it was in January of 2018. But we all know what happened. We then had a slide there. Look, this market's just been prone to these panic attacks. I've counted 65 of them. Not all of them are bona fide corrections being 10 to 20%. I think we've had six of those, but there have been a lot of the little tiny ones along the way here with the idea, oh my God, this economy is going to fall into recession. Let's get out. But I am watching valuation. Valuation is high, whether you look at a Buffett ratio, which kind of looks at the price to sales, basically, of the market. That is an all-time high if you look at it on a weekly basis, as I do. So I'm somewhat concerned about that. What I'm really concerned about is that the market's gotten ahead of earnings, the fundamentals. And I'm an optimist as well, and I agree that you have to be in it to win it, is another way to put it. But I would like this market to just take a pause here for a little while and let earnings catch up. And what's really good so far in this earnings season is in the fourth quarter. It looks like we had some pretty good earnings in financials, and the semiconductors are getting upgraded. So life is good.
Liz keeps it simple, though. Is it really that simple? As long as the Fed's around, as long as the Fed's your friend, all this fretting over valuation and how far stocks have come in such a short period of time doesn't matter.
I agree that it's simple. I mean, to me, it's momentum. We had some questions on the desk just a few days ago. If the banks don't perform, is that going to hurt the market? Are they priced to perfection? So we had some mixed earnings from banks. We had Bank of America, which didn't do so well. We had Wells Fargo. Well, I can't really count them because they perennially disappoint. Goldman was sort of mixed, even though I thought if you look through it, it's a good quarter. And then you had Morgan Stanley, which was good. So it was mixed, and guess what? The market didn't care. So I think the market can take those kind of one-offs and still do well because people are looking for earnings to grow into the multiple. I'm not so sure that happens, but I think it's 6 months or so before you really have to declare on that. So right now, the news is good. There's nothing, and there's never anything that you can foresee that's going to cause the market to correct.
No, but the other day we're saying, okay, can the Dow, Jenny, close above 29,000? Now we're 200 points above that level. This market seems to be mostly unabated.
Right.
Going up.
So here's where I am. I manage a dividend income strategy, which tends to do better in a bad market. So I like bad markets, and I root for bad markets, and I like volatility because it gives me something to buy. And this is kind of painful, right? And then I look at 18 times, and I want to make a negative case. I want to say something bad about it. I want to come up with a bear scenario, and I can't do it. But the primary reason I can't do it is I've got the Fed at my back. Yeah, earnings are growing. But beyond all of that, I have nothing else to buy but stocks. Right? Bonds are just not a great alternative for me right now. Private equity is not a great alternative for me. And so I look at it, and in my portfolio, I do have a lower yield because I do I have a lower valuation because I skew towards value. So I'm not really at 18 times.
But you're saying if earnings disappoint, you say you can't make a bear case on anything?
It's hard.
What if earnings growth is not as good as people think?
I can't make a strongly plausible bear case scenario. Anyone can paint something, right? You have some black swan. Yeah, earnings come out to be terrible, but I don't really see how that happens. So I just wrote this quarterly letter. Sorry.
Yeah, I apologize for cutting. But one of the models that actually looks pretty good is a dividend yield model to your style. We're at 1.8% on the dividend yield in the market, and that's just about where the bond market is, and so it's very competitive. And when you use that dividend yield with the fact that dividends just keep growing and growing, that are all-time record high, you actually get a market from a dividend yield perspective that's fairly valued.
But these are the kinds of things you start hearing when you're at these elevated levels. The justification for it, well, there's no alternative.
I just feel
I've heard that before. Earnings don't matter. The Fed's at your back. I've heard that before.
But
maybe it's right. Maybe it doesn't matter.
Maybe, but if I think back to when we were at these levels before, which is a bit how I felt in 06, 07, or maybe even in 01, or 99, 01, at least you could go to bonds if you wanted to, and at least you could get 5% out of bonds and out of fixed income investment. Now the best I can do is 2%. Right, and that is just not compelling, and that's not going to get people what they need to retire properly. So I think that's the biggest boost.
Every morning I've walked in and said, I'm going to shave more Adobe. I shave some at 300, so I'm going to shave more. And I just can't bring myself to do it because I'm saying, why am I going to do it other than I just want to shave it? You know, it's not really.
Yeah. But do you do any of it? Have you done any of it?
At 300, I did.
And I got to tell you, I've
shaved
Apple,
some positions.
I've trimmed Apple this week. Trimmed Corvo 2 weeks ago. I feel great. I feel great about it. I still have a position. These things run.
Cash?
I am for the moment. Hang on. Let me come right back to that, okay? Because the point being here is we're wringing our hands about where the markets are, Scott. Fine. How about taking yourself out of that?
Maybe we shouldn't be.
Well, my point is you don't have to, okay? These things Apple up over 100% in about 12 and a half months. I know we want to talk about Tesla, but the basic fact is it's up 100% in 3 months. How can you not want to trim? I mean, if you got into Tesla yesterday, I understand you're wringing your hands. Maybe you shouldn't have bought it yesterday. But for most of us, these things have tremendous gains. They're overweight. Take a little bit off. In terms of when to buy, look, I see values all over the place. I can find values in tech. Look at Intel and Cisco. In healthcare, look at CVS, look at Pfizer. I mean, I can go down the list. Energy, financials. But right now, I like having a little bit of cash because at some point, Scott, I don't think you have a crash. Of course not. But do you have a little pullback? That's where I'd like to buy.
I cash, and I agree with you on the stock's up 100%.
I want to hear from Doc, too, when you're done.
But I'm sorry, I forgot you were here.
It's okay.
But very excited. But it depends what your time frame is on Apple. My time frame is not this quarter, which I'm very worried about, frankly, on the iPhones. Yeah, because I think people are holding back for the 5G phone. So I'm looking at a year, 2 year, 3 years on Apple, and I just don't want to pay taxes.
Got to be disciplined. Got to be disciplined. I did this math 2 days ago. Apple at 3% in the portfolio a year ago is now 4.8%. I mean, just trim it back to 3%.
Let me ask you a question. So you talk about a stock like Cisco, which is, for all intents and purposes, being left behind in some respects to this rally.
Keep coming.
Right?
Yep.
Why go to, like, what is doing nothing?
Okay, well, it's been doing nothing over, let's call it about 9 months. I'll grant you that. And that's a fact, okay?
That's a long period of time when a lot of other things are going up.
Yes, but if you look at a 5-year chart of Cisco, this thing's a darling. This thing's a darling. And the little 9-month thing here doesn't show up in a long run chart. They had a couple of quarters where they guided 1 penny below what the street expected, 1 penny. And the stock got slaughtered. Honestly, I think they're sandbagging. I think when their quarter comes out, you're going to see a continued shift from the hardware to the revenue. And by the way, the forward guidance made sense when trade tensions were front and center. Who the heck was buying big server and big enterprise hardware? Now that that's cleared, I think Cisco goes back the other direction, i.e. up.
Doc?
Escalating trade war, Judge, we were all hearing about the impact of it. People shifting, supply chains, all kinds of things. And we all know that doesn't happen with the, snap of your fingers. But nonetheless, they were in those positions. And now that, as I've heard it, $500 billion to $600 billion worth of impact, that was going to be negative on the market. Now that's all at least released. Does all of that come back into the market? That'd be my question for Ed and Liz as strategists is, if that big number is pushed back into the market with the low interest rates that Jenny cited that she doesn't want to put into bonds anymore, does that then continue to lift this? My answer is yes, but you guys are strategists. I'm a trader.
Jenny, I won't interrupt you this time.
No, it's okay. Go.
Well, look, I think at the end of the day, the question is whether it'll show up in earnings. And last year was a tough year for earnings comparisons because we had the tax cut in 2018. We were up like over 20% 2018, and we're up 1% in last year. And of course, the market performed completely in a contrary approach. But looking at this year, I'm looking for 5% earnings growth. Okay. But forward earnings, by the way, which are pretty good at telling you what earnings will be a year from now, they're actually up 9%. So I'm kind of leaning to the thought that maybe the analysts are right. As long as there's no recession, that's really the key to this market. Maybe,
and there certainly doesn't feel like there's going to be in, let's say, not in the next 6, 8, 9 months. I mean, who knows? But it certainly feels, though, Liz, that this is a train that is heading towards S&P 3500. It seems like it's gonna go that way. Is that the time to worry? I mean, I ask you at the top: is it time to buy, or is it time to worry about where we are? What is the time then to worry if this is not it?
Even if we get to 3,500, it's not going to be a straight line up. We're going to have little blips in between. And a point that I want to make about should we worry about the market? Should we get out of the market if it starts to correct? A correction without a recession is a buying opportunity. Right. So the answer is no, you don't get out of the market. And then to Jim's point, if you're holding cash, that's dry powder. If we have a correction and we're not worried about a recession, that's when you deploy your cash. And then you look at valuations, where you're deploying your cash. If you want to trim some winners, that's fine. Deploy it into things that are not winning as much. But as far as, is 3,500 the spot to worry about? Maybe it'll be a mental threshold, just like 2% on the 10-year is a mental threshold, but it doesn't necessarily change anything.
I mean, it's sort of the point that Mike Wilson had made on this desk, that you're going to, you're looking like you're going to get to 3,500. It's a front-loaded year because of the noise in the back half. And after 3,500, maybe then you have to start thinking that it could get a little bit messy, a little more volatile. I mean, what's in front of you now? Okay, earnings season have started off pretty good, right?
I'm going to have a mental problem with 3,500 because last October I was saying that we should get to 3,500 by the end of this year. I mean, we could get there by the end of this month the way things are going, and then I have to kind of like look at my math again of PE times E.
Well, that goes to my point at the very beginning, right? That you start redoing your numbers because you have no choice but to chase it up and up and up. It's like Jeremy Siegel mentioning the other day. He's starting this. A guy called a Perma Bull is himself getting a little nervous. Everybody's redoing their numbers, whether it's on the S&P, whether it's on individual stocks.
They have to, though, Scott. Like I say, $500 billion. Because I kept hearing that number, 500 to 600 billion is the impact.
Where's it come from?
What's that?
Where's the 500 come from?
From the trade war, the impact of the trade war, of the shifting of supply chains and all the rest. They were saying global GDP, global markets would be affected to the tune of 500 to 600 billion dollars. I think a lot of that. Do I think all 600 billion goes pouring into Apple? Yes. No, I'm just kidding. But I do think a lot of it pours into the markets here, and I think a lot of people are rejiggering their numbers based on that, Scott, based on yesterday.
I just don't. I don't see that. I think it's this number that's out there, and supply chains aren't going to. They are moving. And if you're smart and you run a business, you are moving away from China. By the way, I don't think anything's been settled in China, right? We've still got the IP issues. We've still got the forced partnership issues. China's still a powder keg, and you have to.
But they're buying $200 billion, and you know what?
Of soybeans.
I've been soft selling that phase one deal, and I sort of this morning woke up and I looked at that $200 billion over 4 years. I'll take that. That's good. Okay, that's a good deal for America.
No doubt. I agree.
We got more wood to chop. I'll grant you.
I agree with you. But so that's great. But in terms of the market, if we get to 3,500, I don't think it's going to be in a vacuum. So the momentum in the earnings is going to be better than I'm looking for, which is going to get there. And why can't the multiple be 22 times, 24 times? We've been there before in the market in this kind of low interest rate environment. To me, the issues still reside in Europe and in Asia. You're going to see the lowest GDP for China for 2019 in 30 years. Germany is still declining. They possibly fall into recession, particularly what's happening in the auto industry.
Let me bring up an individual stock. It was mentioned on the desk already, and I want to get your thoughts, Ed, on. So the other day, Apple gets downgraded to a sell. Today, from Adam Jonas at Morgan Stanley, Tesla. Okay? Tesla's like the poster of this rally, unabated to the upside. Tesla gets downgraded to underperform from equal weight. We downgrade Tesla shares on valuation, unfavorable risk reward, and risks to the long-term Chinese business that may not be fully appreciated by the market. Before we dive into the individual name, which you don't do, but you do think about these things on the bigger level.
Correct.
When you see stocks like Tesla, stocks like Apple up 100%, Tesla's up like 100% in 3 months, it make you nervous?
Well, look, the central bankers really are behind all of this. I mean, this bull market, since the beginning, has really been all about the major central banks. We used to say, don't fight the Fed. Now we say, don't fight the central bankers. And all of the major central bankers, that's exactly right. I completely agree with Liz. We've got the Fed increasing its balance sheet, the ECB, $20 billion per month in euros is what they are purchasing. And they announced that in October of last year, and the Fed started to reverse course on its balance sheet just a couple of months ago. And then you've got the Bank of Japan just keeps going along its merry way. And finally, you've got the Bank of Japan continuing to cut their reserve requirements. So there's an enormous amount of liquidity coming into the markets. And the key here is the inflation numbers. I mean, the CPI number came out and said, another garden variety low low inflation number. But that number is critically important. If inflation doesn't make a comeback, Jerome Powell, the Fed of the chair, the chair Fed, I get them sometimes confused, as I just did. But what happens is Jerome Powell has said in October of last year that he's actually not going to do a thing as long as inflation stays moderate.
Tesla, downgrade to sell. I mean, are there other stocks that we talked about the danger zone the other day, on the day of the Apple downgrade, other stocks that were ripe for a move that you had to keep your eye on? Tesla was on our list.
Yep.
And sure enough, here it is, Jenny, today from Adam Jonas.
So I think
biggest name on that stock.
I have no problem with Apple's move, but I do have a problem with Tesla's move. And I was having lunch with a client yesterday who was saying that her colleague was curious what I thought of Tesla because he was sorry he hadn't bought it. And I said, here's my prediction on Tesla. In 10 or 15 years, this ends up being a Harvard Business School case study on groupthink and lemming mentality that drove it up, because there is nothing but fumes behind that. Fumes, emotion, like there's just no, what is it, like earnings in 2023 might bring it to a, what did he say?
31 multiple.
A 31 multiple, right? This is just cuckoo. And so I think there are things like Tesla out there that have gotten just, rising on fumes and emotion.
John's continuing to bet on the upside. You own calls.
Short
I
term,
own,
you might be
yep.
right.
But
Short term, you might be right, but
as
long term?
as I said, Scott, about Tesla and about Apple, to Jim's point, I didn't sell my stock in the case of Apple. I held that, still my biggest holding. In the case of Tesla, I did sell the stock. I have call spreads now. I mean, when you can define your risk and stick with a stock like this that has just gone, vertical like this, that's, I think, good risk reward and risk management. So on a day when the stock's down 3%, maybe even 4% today, is that a bad thing? Sure. Was it a great thing for the last 6 months as it went from 180 to 530?
100% in 3 months.
Yeah.
I mean, I'm just wondering.
Oh, it'll do a lot more than that.
Yeah, I'm going to ask you the same question I asked the other day, because I want to know. I want us to try and inform people who's going to be next. Who's going to be next?
Well, I think
Corvo's up. The gains over a 3-month period of time are just unbelievable for names like Corvo, which you mentioned, better than 40%, and Skyworks the same, and AMD 61% in 3 months.
So it's always dangerous to answer the question of who's next, but I like danger, Scott. Look, I think the chip sector is where you got to look, right? So you mentioned those names, and AMD is up there, and NVIDIA, and look, these are fabulous companies, but those two in particular trading at mid-30 multiples for chip stocks, I don't care how great they are. They're chip companies, all right? This is a capital-intensive, highly competitive business. 30 times multiples on chip stocks is the danger zone, to use your term. So that's where I would definitely be lightening up right now. Go ahead.
You know, when people start talking about a new era and a brave new world, that's when we really want to worry. And I don't see a lot of that talk just yet, but I'm about to say the market is discovering a brave new world of semiconductors being in everything, and maybe that's what's driving.
Well, they are. It's factual.
That's factual.
Let me not overstate it. Okay, those companies, I think you should definitely be trimming. So to your question, Scott, what's in the danger zone? I'm not saying you got to take NVIDIA and AMD out behind the woodshed and shoot them. No, but trim them. If you're looking at these up, whatever they're up, 100%, I think on both of them. And I mean, AMD is in the mid 30s. It was down in 19 land not that long ago. Look, trim these things. What more are you looking for?
I don't know. Analysts are looking for $80 from Western Digital.
I'll go
from
with
65.
That. But here,
analysts are looking for 65 on Micron. That stock's up 30%.
But they have real earnings
in 3 months.
They have real earnings behind them. So, like, I bought Western Digital.
Are the earnings that good to justify a 30% move in 3 months?
I think for me on Western Digital I bought and this goes kind of back to Cisco. You don't know when you're going to get your KISS, but if you have a long time frame, you can make a lot of money. I bought Western Digital. Maybe this week exactly, a year ago. I paid $37 for it, and my presumption was that earnings in a year should be $7. So on a $37 stock with $7 of earnings and a $2 dividend, that's really easy math. Fast forward, here we are today, and now the analysts in those reports are saying, guess what? Earnings aren't going to be $7, they're going to be $8.50. Right? So that to me is a very different up 100% this year than a Tesla up 100%. That is based on money and cash that's flowing in, going into people's pockets.
Part of the point, though, is that these price targets, Liz, are being hit faster than people think. That the S&P targets are being hit faster than people like Ed expected that they would. So you're left no choice but to bump either that or the individual stock price targets higher.
Well, so when you do worry about valuation is if it's all multiple expansion. So if just the P is moving and the E is not moving, that can be a problem. But in 2020, I think that E component actually starts to pick up, and then the market has to start looking at fundamentals because we don't think the Fed is going to move this year. I mentioned before that there's a lot of monetary policy support, mostly international. The Fed is probably not going to do it anymore. So the U.S. market is going to have to look at fundamentals, and this is a year when earnings go back to normal. Average earnings growth is about 6 to 6.25% on the S&P. Right now, it's predicted to be 9.4 for the full year. It probably comes down, but I'm okay with it as long as we stay above average.
The other side of the coin, obviously, in looking at what's too expensive, perhaps, is trying to figure out what's still cheap. And, you know, some of you are making some moves in some names. Weiss, you added to Qualcomm. You added to Akamai. You added to Target, which is amazing. You think Target's still cheap. I know it had a pullback yesterday, but it's had a stratospheric move heading into that.
It has. So I'll take Target first. So Target, they had 3 great quarters, and they had a bad quarter in Christmas because of what I'd call bulk gift buying, electronics and toys. That quarter's done. We're going to go back to the trajectory that Cornell has put in place through his changes there, where now we can get 3 good quarters again of solid performance. So why not? So I added 2. It wasn't a big position to begin with. Qualcomm, as I've talked about 5G so many times, Qualcomm, I spoke to the company a couple of weeks ago, they will get, versus 4G, they will get 1.5 times the dollar content on 5G phones. That's big. And Qualcomm is still not. We've got a long-term Qualcomm bull here who's waiting for it to pull back. I'm not sure it pulls back. Pulls back, I'll buy more.
I'm not sure either. I might be totally wrong on that.
In terms of Akamai, you're seeing, I've done so much work on this, on the data that continues to go through the pipes globally. It's amazing. Akamai's right there. The traffic comes through, whether it's 4G or 5G or even 3G, they are going to do extremely well. So I didn't have a full position there either. So I like those names. To me, I looked going to semis. I did work on, so I've talked about maybe a dozen semi companies over the last month and a half, but I also charted some that are in a portfolio I'm looking at, and if you look at 10-year periods, 10-year period of 3G, 10-year period of 4G, you'll see that those companies, that the smash outperformed the S&P by 1,000 basis points, outperformed the NASDAQ. There are some stocks in there that are up 1,000%, 750%. It's not that unusual. So why would I sell that here, particularly when we're in this new age where so much more is going in? So autonomous cars, we talked about. Looking to play Tesla for autonomous cars. Forget Tesla, okay? Autonomous cars probably 5 years away. Buy the chips that go into it, right? Buy ADI.
And it's another reason the 5G is important for that, because autonomous vehicles, most of us with these, we're not going to notice the difference really that much in the speed. Yes, it will be faster, Scott. We know that. But for most of the apps we're using here, you know, so it's going to take 1.5 seconds for me to see something on here instead of 2.5 seconds.
Right.
But to the autonomous car side, that is critical. They say it over and over again. They said it at CES last week, and that's truly where their benefit lies, is for the heavy users of pull data like that.
All right. I got to bounce. Take a break. Good to see you. Thanks for coming in.
My pleasure.
Good to hear from you as always, Ed Yardeni. Here's what else is coming up on the Halftime Report.
Morgan Stanley shares spike on earnings, while U.S. Bancorp gets a downgrade. Our experts debate the financials straight ahead. Plus, we want to hear from you. The Investment Committee will answer your questions in Ask Halftime. Go to cnbc.com/halftime or tweet us. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Rainy, 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 rainy.
Sergey, why are you in such good mood?
It's raining. And? Rain means we take meal pups to cinema. And cinema means they'll be entertained.
And entertained means they're also quiet for a couple of hours. Oh, let's go. Enjoy 2-for-1 cinema tickets for Meerkat movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays. Participating cinemas. 2 standard tickets only. Cheapest ticket free. T's and C's apply.
Here at Tesco, we're celebrating over 100 years of great value, with even more great prices that take you back. Like a 6-pack of apples, from 69p to just 49p. All this week at Tesco.
Selected larger stores subject to availability. Offer ends 20th of January.
On this week's On the Media, tips and tricks for how to inoculate yourself against war propaganda.
If you watch Fox News, you'll see what can be fairly characterized as war lust. I shouldn't even say Fox News alone because it does permeate everywhere. And you really got to watch out for that.
War themes and memes on this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. Let's talk about a bearish call in the financials. U.S. Bancorp downgraded to underweight at J.P. Morgan. The firm saying it's a combination of weak performance and a premium valuation relative to its peers. We've made it our call of the day. Look, anytime you've got these sell calls on popular groups, it's time to sort of stand up and take notice. Doc, what do you think about this? Sell U.S. Bancorp. Price target cut only by a couple bucks, 55.50 from 58.
Well, return on equity cut from nearly 16 down to basically 12. That's a big drop, Judge. That's year over year, but still, that's a big drop. I expected them to be hit a lot more than this because of that, and because their net interest margin and other numbers weren't exactly up to snuff. But you're just not getting the pullback in this one. You got it in Wells Fargo, and you had a nice little drop there. I think you could put on, I didn't, but I think you could put on a nice position there, and it's making a nice upside move today. But this one, it's not even reacting to the weakness.
Market's given the Heisman to the analyst on this one.
Yes.
Well, yeah, but
and I'm surprised.
I'm surprised. The stock really hasn't done anything for a very long time. And I know we've said that about financials, but financials have recently rallied. And the reason it's left behind is frankly because it's in no man's land. It's not big enough to be a big money center bank or investment bank, but it's not quite a regional bank either. And those are two actually distinct sectors within the financials. Nobody knows what to make of this, so it's undersubscribed by the investing community. I think that's going to be a perennial problem for it.
Let's switch and talk about Morgan Stanley. They're the ones who had a big old beat today. That stock, Doc, was looking beautiful.
Yeah, and I think Pete the other day, the 14th, just 2 days ago, was talking about big upside call buying. They bought the 56 calls. That seemed like it was a real reach for the stock to get to 56. Well, they're buying them for 7 cents, Judge. They went to $1.20 today. I mean, that's an explosion to the upside. Yeah. It's hard to see anything that Morgan didn't do right here.
It's a new high
their
for the
wealth
stock today.
management is crushing it. And I remember you and I talked a little bit about Citigroup and how they didn't have that component anymore because of the deal they did with Morgan Stanley. That is paying off for Mr. Gorman in spades.
You don't see stocks like this move 8%. Yeah. It really is an amazing move for the company.
Yeah.
And it's credit to Gorman. He's had a strategy. He's stuck with it. And that continues to be the way to go.
I tell you what, if you came into earnings season, like Jenny maybe, looking for a pullback, what you got so far?
Not getting it.
Not going to feel really good.
No.
Most others are. You may not.
It's early, though, Jenny.
I'm fully invested, but
it's early, but if this is the way you wanted things to get going, they have. Morgan Stanley up 7%.
Look, if you look at the numbers historically, every earnings period, the companies that really miss are so small in the margin. You'll have 65, 75% that meet earnings, and then you'll have more that beat than disappoint because they guide down during quarter. This quarter will be like that, just like that. No major surprises.
We've been thinking on this, we've been thinking that it doesn't matter. The numbers this quarter don't matter that much, really. It's just more about the guidance, right? Because, okay, 2019's done. We kind of know that it was a lackluster year. So it's really going to be the guidance as we go into earnings season, and if the guidance can support that 10% earnings growth.
All right, let's go to Sue Herrera for the headline source today. Hi, Sue.
Hello, Scott. Hello, everybody. Here's what's happening at this hour. We now know what was said during the tense confrontation between Senators Sanders and Warren after Tuesday's Democratic debate. CNN has released audio which reveals each accusing the other of labeling them a liar.
I think you called me a liar on national TV.
What?
I think you called me a liar on national TV.
Let's not do it right now. You want to have that discussion, we'll have that discussion. You called me a liar. You told me. All right, let's not do it now.
Hong Kong's chief executive Carrie Lam says the one country, two systems framework, under which that city enjoys freedoms unknown in China, could possibly continue after the 2047 deadline if loyalty to Beijing is upheld. Her comments at the Legislative Council appeared to be an appeal to those who see Beijing as tightening its control over the territory. And Demi Lovato will be singing the national anthem at the Super Bowl in Miami next month. The NFL made the announcement today. Lovato is a Grammy-nominated singer, songwriter, and actress. You are up to date, Scott. That's the news update this hour. Back to you.
All right, appreciate it, Sue. Thank you. Microsoft shares trading at all-time highs, and Jim Cramer sits down with the CEO tonight, 6 p.m. Eastern on Mad Money. Satya Nadella, we cannot wait for that. We're going to talk with Jim next ahead of that big CNBC exclusive interview. And as a reminder, you can always watch us live on the go on the CNBC app. We're back after this.
Exploring the heart of historic Europe with Viking.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Rainy, 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 rainy.
Sergey, why in such good mood?
It's raining.
And?
Rain means we take meerpups to cinema. And cinema means they'll be entertained.
Ah, and entertained means they're also quiet for a couple of hours. Oh, let's go. Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays. Participating cinemas. 2 standard tickets only. Cheapest ticket free. T's and C's apply.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Puts his head down, crashes into
the snap is good. The hold is good. The kick is on its way.